All right, guys. We are here today. I'm starting the stream a little bit earlier. I know I've been starting it late, and everybody's been complaining about me starting late. So I'm gonna try to start it early today. We'll see how it goes. It's a big earnings day, to be honest. We got Tesla earnings, Spotify earnings, UPS earnings, Coca-Cola earnings this morning. Tesla earnings are this afternoon. But yeah, we got KO earnings, UPS earnings, uh, Google earnings this evening as well. But we're here. You know. Forgot to monetize my stream. That might help. There we go. What's up, game? Eric. We'll see if we get a different crowd showing up. What's up, Sandy? I know we got a lot of people that want to watch the stream because we're early. Because we're early in the market. And so I know we got a lot of people here that want to watch the stream because we started really, really early. Honestly, y'all are just lucky today because I got up at 3:45 and couldn't go back to sleep. I have insomnia sometimes, and so, you're welcome. But we're here. Again, Coca-Cola drops earnings today. Let me go ahead through the list. We got Spotify, UPS, both supposed to drop right now. So Spotify is supposed to recently drop, and they are up to 318. So Spotify did just report their earnings. Look at Spotify on the right side here. Let me get everything up. I'll show you guys what these numbers are. We'll put some music up as well. Yeah, Spotify posted 133 EPS versus 106 expected, revenue of 3.81 versus 4 billion. But again, weird because they missed revenue. Monthly active users were down. Quarter 3 total revenue came in at 4 billion versus 4.01 billion expected. So lower than expected quarter 3 revenue. Quarter 3 monthly active users showed up lower than expected as well at 439. This doesn't make much sense to me. If we look at Spotify here, this is strange. Why is it strange? It's strange because this is Spotify's numbers here. And nothing here should be taken as forward-looking statements. We're not investment professionals, not liable if you lose money. Yeah. Wait. Wait. Dude, so I spent the whole money writing up a disclaimer. And where'd it go? It disappeared. Do I have to write another one, man? What happened? Where's my tags? My tags are gone too. Hold on. Oh, dude, I don't know what happened. Here, I gotta write up my tags. We got GM, UPS, more and more. All right, man. Dude, I did all of this already. All right. I'm going to have to do my whole tag list again here, man. But yeah, today, again, Tesla stock dropping earnings this evening. Google stock dropping earnings. Yeah, so Tesla, we got Spotify, we got UPS, Coca-Cola, and more. A lot of big news results here. All right, so we got that. All right, here, let me put some music on. It'll help. I got to write these tags up. Look at Spotify run here. Wow. Yeah, so Spotify running. Are we lagging here? Okay, my AirPods are working. There's Spotify's numbers. We'll put those up. Look at it. It's weird though. Spotify missed on revenue, and they're up a lot. You know, so Spotify missed revenue, missed a bunch of stuff, but somehow it's up. We also had UPS drop earnings. They're gapping down a little bit. I think they just dropped. We'll cover those in a second. Yeah, I don't know what happened with my yeah. So we had Spotify earnings, Coca-Cola earnings, UPS earnings. Alright, well, we just updated everything here. I don't know what happened, why it originally kind of took it down. But yeah, look at Spotify is up there. We also have a bunch of other ones too. Now let me get this up here. Let me get all the scrollers. Sorry, I know you just heard the banging sounds of my keyboard. We got our banner here. Yeah, I figured a lot of people are going to be sleeping. But yeah, so Spotify posted 133 versus 106, so way better than expected EPS, but they missed in revenue everywhere. Their monthly active users were down relative to what they were supposed to be. You can see their MAUs was at 626 versus 632. Expected. Quarter 3 total revenue came in lower as well at $4 billion, slightly lower. Quarter 3 monthly active users came in at almost 640 versus 651s, and so they missed as well. ETH up to 3,500, almost 4K. UPS did report as well at 179 versus 199. They missed. Revenue missed as well. So a lot of stuff's missing this earnings season that I'm seeing here. Here's UPS. You can see UPS gapping down slightly. I feel like Spotify might be up too much here. Spotify up to 323s. I might short them, to be honest. Let's see. I can't really short it yet. I think I gotta wait, but I was thinking about it. What else do we have here? So at 6:30 we have GE. We've got GM. We've got Coca-Cola, Lockheed Martin, Comcast, and a bunch of other earnings this morning. Yeah. And do me a favor, hit the like button on the stream. Yeah, I mean, I need coffee every morning. Although I've been thinking about giving it up. Like, I really have been thinking about giving it up. Tesla earnings are this evening. All right. Yeah, GE is General Aerospace. GE is, it used to be General Electric, now it's GE Aerospace, but it used to be General Electric is what this used to be, GE company. So GE is popular for its LEAP aircraft engines, heavy-duty gas turbines, Halliday X and Cypress wind turbines, and healthcare solutions. Its products range from jet engines, airframes, energy production solutions to offshore turbines. technologies and medical imaging and leasing and financing systems. It has the following operating segments: power produces steam and gas turbines, power generation services, and generators. The power segment includes gas and power portfolio. Yeah, so that's GE as a company. Again, they used to be just GE. Now they're calling themselves GE Aerospace. Yeah, so the earnings today for Tesla are this evening. I'm gonna have to switch these AirPods out. Something's wrong with my AirPods. They sound all fuzzy. So like, what's weird about these AirPods? They've been dropped in a couple cups of coffee. But whenever only when I'm at my computer. It's only when I'm at my computer. When I'm at my computer and I'm listening to my headphones, they will cut off and like make this fuzzy sound, and then completely like it'll be like a raspy sound coming from them, and then sometimes they'll go back to normal, but most of the time they don't. All right, so the SPY had a pretty good day yesterday. We actually ended green in our portfolio a lot, mostly stemming from Nike. Like Nike helped us a lot yesterday. Nike had a big move up to $75 a share. We're almost flat at Nike, which is great. So we're almost flat Nike-wise. We also had increases in a lot of other stuff. We're holding a lot of the plays that drop earnings today, specifically Coca-Cola. What else drops today? We're holding Coca-Cola and Tesla. But UPS dropped. Yeah, usually I start after 6:30, but I'm gonna try to start streaming earlier again if I can, if we get the viewership, for it. Yeah, it's supposed to rain today on my end too. We'll see. Let me do a poll. Does the stock market have a bullish or bearish reaction to today's earnings? Bull, bear. Again, we got Google, Tesla, UPS, Coca-Cola, GM, Spotify, Lockheed Martin, Comcast, Philip Morris, Danaher, Polaris, Sherwin-Williams, HCA, Moody's, Quest Diagnostics, Albertsons, First Bank, a lot of stuff, to be honest. Yeah, so look at Spotify. Spotify's still up, though. Here's Tesla. Tesla's still pretty green at 254s. Spotify up to 330s. Let's look at the long-term chart. I don't know Spotify super well. I like Spotify a lot, though, as a company. But they're also up over 100% this year. They opened the year at about 140s, 150s. They're at 300s right now, basically. They're over 300s from this earnings report. They're up to 330, so a really big percentage gap up on their earnings here. Look at this. So yeah, they're gapping up. Man, I didn't realize how big of a percentage gap up this is for Spotify. So percentage-wise, this is let me calculate. This is 15% gap up for Spotify on earnings. That's a big gap up, and it's very strange too because their monthly active users were down, their daily active users were down, and their revenue missed expectations. So, interesting move here. Definitely not what a lot of people are going to expect for this, but interesting nonetheless, We asked people what they thought we would get from this earnings report. 80% say bull, 20% say bear. Hmm. CrowdStrike starting to show signs of finding a bottom and turning back up. Is it really? Yeah. So I'm hesitant to buy CrowdStrike just because of all the craziness that happened. But they broke all the way down to 260s. Who knows when they're going to find a bottom? The question is, how strong is the company overall? You know, I think if we look at like CRWD and we look at their EPS graph, you know, for CrowdStrike here, they've only just received profits. Like, they've only just started showing profits this year in 2024, prior to 2023, really. And they showed slight profits in 2023. But I don't know. I would usually buy it up if it was like a really strong legacy company and that it dropped this much. I would usually be willing to buy it up. But like, I mean, I think the trend looks good for their EPS's profits, basically. So EPS is margins for companies like this, right? But I think when we look at it, it's only had 5 quarters of profitability like recently. The last one prior to that was 1 quarter in 2020. But outside of that, they've only had 5 profitable quarters. I don't think that's long enough of a history to really bet on, unfortunately. You know, I just don't know if that's long enough of a history to really bet on. Although I do think they're down enough to where you could argue it. You know, you certainly could argue it. But yeah, let's look at their revenue. Yeah, so their revenue trend is actually really good, which means, like, what this means is that they're using their current revenue to grow. And again, their revenue trend looks really solid, of course, so maybe there's an argument here, but I don't know. Their growth is slowing. You see they had massive growth in 2019, 2020. You know, they're growing 33% a year, which is still solid, though. So yeah, we'll see. Kathy loaded up on CrowdStrike selling Tesla. I know you don't agree with Cassie's approach, but usually stocks go up after she buys. Honestly, I agree with this trade more than a lot of her other trades. Tesla drops earnings at the closing bell at 4 p.m. Eastern Standard Time today. But no, I agree with her approach more here than I do with her normal approach. A lot of the time, Kathy Wood buys up really hyped up, overextended stocks. And that approach I do disagree with. But I think in this instance, you know, this is a little bit more understandable of a dip, you know, of a buy, I think. This is a much more understandable of a dip. You know.
Have you ever missed?
Sorry, I'm checking out my guy Money Mitch's stuff over there at Trade the Pool. I have to get him on the stream, and I might go on one of their streams. I've been busy lately, but yeah. Tesla earnings, guys. Tesla earnings. Honestly, that'll be a fun stream, though. It really will be. Yeah, but only 1% of PCs affected. That was insane. Wow, I heard 1%. You have a bug near that spot? What do you mean? Are you talking about why my headphones don't work? Are you saying there's a bug near me? Like a mic planted? I mean, that makes... I got a lot of tech in this room. Like a lot of tech in this room. Now, I don't know if I would call it a bug, but it really is only at this computer specifically that the headphones glitch out like that, right? So only in my office does the headphones glitch out. Everywhere else they work fine, you know. So I don't know. Yeah, y'all do me a favor. Hit the like button. I'm trying to test starting really early. People always just say, oh, I want you to start really early. So I'm doing a test to see if that's really what people want. Because, you know, I don't know if that's really what people want or not. You know. DCA maybe on CrowdStrike. I don't think it's a terrible idea. I'm going to try buy it up a little bit. I think I'm going to buy a small amount. When does CrowdStrike earnings, though? So I think I'm going to try. In 4 minutes, we also have Coca-Cola, GE dropping their earnings. So Coca-Cola and GE dropping their earnings in about 3 minutes. 3 minutes. CrowdStrike drops their numbers September 3rd, so we got time. Okay, we can buy this. How many shares should I buy, though? It's such a big range right now since it's down so much. And just in terms of daily movement, this thing yesterday, just put it in perspective, CrowdStrike just yesterday alone moved $30 a share, roughly. A little bit under it, but like $25 to $30 a share. That's a big move. So like risk management terms, say I buy 10 shares, right? That's $300 in movement yesterday alone. So I'm gonna have to buy less than that. I'm gonna buy a small position here, a very small position, and we'll see what happens. But I have to wait until I gotta wait until 6 a.m. my time, 7 a.m. market time to actually trade on TOS. I have to start up like a Webull account or something to be able to trade some of these moves, because a lot of these moves I'm really interested in buying, but Tesla has huge potential today and the following days. Yeah, I'm curious if we're gonna get choppy action though. I mean, I know we have some big earnings. I know we have some big earnings, but I'm curious whether we're gonna get choppy action or not. I don't know. All right, again, the SPY up to 555s. CrowdStrike's trying. The SPY up to 555s. CrowdStrike at 265.70s. Yeah, see, they're even CrowdStrike. The problem is they're even bouncing up a little bit right now. They're at 266. All right, guys, here we go. We got 20 seconds until Coca-Cola and a couple other ones drop. We had General Electric post 120 EPS versus 99 cents expected. Revenue at 8.22 billion. They missed revenue at 8.46 billion expected. But again, right now we have GM and GE dropping right now. So again, GE is out. Waiting for GM. So let's look at GM. So Coca-Cola doesn't drop actually until 6:55 market time. So we still got a couple minutes left. Here's GM. I don't see anything out yet, but here's GE reported. So GE is out. They posted 120 versus 99 cents. They missed a lot of revenue though here. Let me check it out. So we're gonna post those in chat. Again, there's GE. Spotify is out. Spotify is the biggest reaction this morning, man. That thing's up a lot. All right, so there's, again, 7:30. Or here's 6:30 market time. Barclays raises year-end 2024 S&P target to 5,600. Previously, it was 5,300. Currently, the S&P is around 5,500. So basically, they think we're going to be flat for the rest of the year, which is interesting. Again, like, look at this price target. So Barclays specifically saying, all right, so there's PBHM earnings. Hey, what's up, Tiny? Barclays raises year-end 2024 S&P target to 5,600. It's odd, though, because, like, we still have 5 months left in the year, and we're basically at 5,600 right now. You know, we're at 55.70s on the S&P. And so what they're essentially saying is that we're going to be neutral for the rest of the year. And I'm not saying I disagree with them. There goes GM popping up. So GM's earnings are out. Look at GM. GM at 51.70s. 51.70s for GM earnings. I don't see anything out for them yet. We're waiting. Spotify is out. Kimberly-Clark dropped their numbers. Still waiting for GM. Again, General Motors is the big one that dropped. So, okay, General Motors raised guidance. They posted 306 EPS versus 272 expected. Sales beat as well. So, yeah. Okay, GM had good numbers. GM beat all estimates and raised guidance for GM. So, again, GM beat all estimates and raised guidance. So, they posted, again, 306 versus 270s expected. Again, they did raise guidance. We're going to put these numbers up on screen as well here. But yeah, they raised guidance. Better than expected numbers here. And GM is gapping up to $53 a share. All right, so here's GM's numbers. We're going to put those up on screen. Getting a little bit of a dip. Spotify, I guess it's good. I was thinking about shorting, honestly, Spotify way up here at 341s or at 330s. I was thinking about shorting it, and it's up $11 a share since I thought that. Luckily, on TOS, I can't trade before 7, so we still got 30 minutes before I'm able to trade. But man, GM is up. Spotify is up. UPS is down from earnings. Again, the SPY is doing really well, reacting positively to all this. If we put up the SPY here, here's SPY. SPY up to 555s today. Again, GM up big. I guess the question is it time to buy RTX? Here's Spotify's numbers here. So we'll put Spotify numbers up too. Whoa. All right, so Spotify numbers are out. Kimberly-Clark numbers are out. GM numbers are out. UPS numbers are out. Here's Spotify's numbers. I'm not sure why it disappeared, but again, if you want to see Spotify's numbers, Spotify's the right chart here. It's up to 340s. Hey, what's up, Sam? Yeah, market's moving up. I get a lot of bullish. What's really strange, though, and this is why, like, I always try to tell people the same thing. Earnings are not predictable, okay? Like, the reactions to earnings, I mean, the actual earnings might be. Again, here's EBITDA guidance. If you don't know what EBITDA means, it means earnings before interest, taxes, depreciation, and amortization. But this is EBIT. I don't know. I guess it's not before amortization. It's EBIT. Adjusted guidance is 14.5 versus 15 expected. Or no. They raised it. So again, here's their guidance numbers. They're raising it up here. So again, they raised it from 14.5 to 15. Increased 2024 operating cash flow guidance from 18.3 to 21.3 to they basically raised it from 21.3 to 22. So they raised guidance for GM. They raised earnings before interest and taxes guidance as well. Here we go. We broke 100 viewers. I'm trying to track viewership early, you know.
Hi guys, this is.
All right, guys. So yeah, so we're at 338s for UPS, or no, for Spotify. GM is up there. UPS also reported this morning. So here's UPS, and UPS missed. Again, what's really interesting is that earnings are simply not predictable. the reactions to earnings. Why do I say this? Okay, because if we look at all the major earnings reports that dropped today, UPS posted 179. Okay, UPS probably not the best example. If we look at, which one did I first look at this morning? I think it was Spotify. Spotify didn't necessarily post good numbers here. Spotify posted, if we look at Spotify here, hold on, let me pull it up. Yeah, Spotify posted a beat on EPS, but a big miss on revenue, a big miss on monthly active users, a big miss on quarter 3 revenue from 4 billion, under 4 billion is what they showed up, and a big miss on quarter 3 monthly active users. They expected 650, they showed up at 630s. They missed 4 out of 5 metrics, yet Spotify is gapping up 15% plus, over 15% right now. So even though they missed all of this, they're still gapping up like a lot, which is interesting. GE Financial is out. So GE Financial, which is General Electric, they changed the name. It's GE Aerospace now, by the way. But no, they changed the name. But no, GE is out. They posted 120 versus 99 cents expected revenue of 8.2. They expected 8.46, so almost 8.5 expected. They showed up at 8.2. So I'm curious what GE is doing. There goes GM coming back down, though. So yeah, GE is flat. I thought GE might be gapping down on this report. But again, the SPY is up. Mostly positive reactions to earnings this morning. Mostly positive. The Q was up. The SPY is up. So, yeah. I didn't see Spotify guidance. Let me see. Now, I didn't really look deeper into Spotify because this was really early. They see quarter 3 total premium subscribers at 241 mil. GAAP EPS at 133. Missed estimates of revenue. Quarter 2 monthly active users is still up 14% year over year, but it missed expectations. Total premium subscribers 251. Second quarter subscriber net additions of 7 million were 1 million ahead of guidance. Now, I wonder if there's and you guys might be able to have a little bit more details about something like this, right? But I think in playing earnings, can you watch comparable companies and their reactions to certain earnings and then get a good idea of how, again, comparable companies might react? Like somebody said Netflix in the chat. Did Netflix move in a similar way to their earnings? Yeah, I'm looking at Netflix. Netflix 675 to 660 maintains neutral. Is there stream sharing in Spotify? I'm not sure. All right, so Apple slashes Hollywood strategy and pulls back on streaming ambitions as Netflix dominates, according to a report. Some people are saying that Apple is refining its strategy in Hollywood after spending $20 billion on original TV shows and movies that have yet to attract large audiences. The company aims to control project spending by holding regular budget meetings with studio chiefs Zach Van Amberg and Jamie Allwright. Studio invested over $500 million in movies from directors Scorsese, Scott, Vaughn, and over $250 million in World War II miniseries Masters of the Air. Yeah, the problem is I haven't seen a lot of, like... Did Scorsese do a movie with Apple? What do they do? Outside of Flower Moon. See, I love Scorsese movies. Every movie he makes is good. You know, every movie he makes is good. My favorites being Casino, Goodfellas, Wolf of Wall Street, Uncut Gems, really good. A lot of other ones too, but yeah. All right, ETH ETF launches today. Price front running already. Yeah. All right, guys, and so again, in a couple minutes, we have Coca-Cola earnings, which I'm really interested in because I'm in Coca-Cola. You know, so KO earnings drop at about 10 minutes, 12 minutes. Yeah, Uncut Gems is really good movie. ETH ETF launches today. Price front running. So, what is the ETF for ETH supposed to launch? Bro, I'm not saying Twitter is bad, X is bad, okay? The problem here, all right, and again, I'm not saying it's bad, right? I'm pretty middle ground here, as I always am with both things. I'm not saying Twitter is bad or X is bad, but like, dude, everything is a conspiracy theory when I turn on that site. Every time I go on that site, boom, conspiracy theory. I don't know if it's just kind of pandering to me and like me wanting to believe all this crazy stuff, or if this is just how it is for everybody. But every time I turn on X, it's like, you know, yeah, there's a lot of crazy stuff that it says. Like, are politicians lizard people? You know, like all this crazy stuff. I don't know how to feel about it. You know, like part of me is like, well, let me build up that audience. The other part is like, is it just sending me conspiracy theory stuff or what? Let me know what you guys think. Is it showing you guys the same stuff? It's got to be just me, right? It's everyone. Yeah. I figure it's an algo as well. SEC approved ETH ETF Monday trading may have already started. Yeah. So what is the symbols? Price dipped 10% for a week and then did 70% move up. And ETH, yeah, ETH is flying right now, flying. I don't know where Cam went. I haven't talked to Cam. Sometimes we look up a product on Amazon and Google to see how many ads we get on other sites. I actually heard a much scarier thing about this all. And it's not Google. It's more so like Amazon. I heard a much scarier thing. I don't know if it's real. But I heard a much scarier thing. So people always act like, oh, your phone's listening to you. And I don't know if that's true or not. Again, I really don't know. Okay. But I heard a much scarier theory when people actually looked into it. What they found is that your phone is not like directly listening to you, but it's honestly scarier than that. The algorithms, they say, are getting so good in in judging what you're about to do and analyzing what you're about to do that the predictability of yourself has gotten so high through these algorithms that they know what you're about to be interested in. They know what you're about to buy. And that's why you get such targeted advertisements, is because their algorithms have literally gotten so good at predicting what you're about to do that, you know, that's a scarier thing, I think, than them listening to me. You know, they can listen to me. I'm going to be talking about a bunch of nonsense, but I think it's scarier if they could actually predict what I'm about to do outside of that. That's a scarier thought, I think, you know. Maybe at 10 a.m. Oh, we do have manufacturing and services PMI today. We do have that today. I forgot about that. So we do have S&P manufacturing. I don't know if it's S&P. Hold on, let me see. So we have. Or no, we don't have anything today. My bad. Yeah, we don't have nothing. We don't have anything today. All right, guys. So, all right, Spotify moving up. Q is up there. GM bouncing right back here. Coca-Cola is supposed to come out very soon. So Coca-Cola, again, guys, is supposed to drop in 55 minutes. I'm watching to see when it comes out. But Coca-Cola is supposed to drop. Quest Diagnostics just dropped. Quest Diagnostics posted 235 versus 234, revenue of 2.4 versus 2.39, basically as expected everywhere. They did lift their guidance, though, for Quest. So they did lift their guidance, though, for Quest. All right, so look at GM. GM also reported back up to 52.20s. So GM also reported to get back up to 52.20s. Climbing higher and higher. We'll see if it continues up. Huh. Yeah, Google and Tesla are both aftermarket closed today. Bitcoin dropped 10% over 10 days. Yeah. All right. Yeah, so look at the Q rejecting right there. So the Q and the SPY are all very nicely upward trending here. All right, guys, here we go. So we're about to drop Coca-Cola earnings today, chat. Coca-Cola earnings about to come out. Super Micro, Super Micro is one of those stocks that I think is just big risk, big reward. If there was a picture perfect stock for big risk, big reward concepts, it's Super Micro Semiconductors, right? Like this thing has gone from $200 a share up to freaking $1,200. So crazy appreciation in less than a year. It has since gone from $1,200 plus a share all the way down to $730s. So percentage wise, that's like a 40% drop, right? So it's dropped 40% in the last 4 months though. And again, this thing could either go down to 300, 400, or it could shoot back up and break 1,200 again. I have no idea. It depends on the strength of microchips. Microchips are going to be the end all be all of this stock. And if microchips thrive and AI picks up more and more, and again, I've said this once, I'll say it again. I think it's good if Nvidia and other microchip stocks simply hold the gains that they've currently made. I don't think they even have to go up more. I think they just have to hold. I think a lot of them have gone up dramatically over the past year plus. And, I think if they could just hold the gains that they've made, like here's a yearly chart. I think if they could just hold and stay sideways and maintain that and allow the market to kind of, then they'll be fine. But if the big risks of the market right now are stocks like Nvidia come all the way back down to under $100 a share, I think if that happens, the whole market's going to tank. And so the question is, can these microchip stocks hold? And I don't know. I hope they do, but I don't know. Bitcoin dominance will hopefully roll over now with the ETH ETF one. Bitcoin ran up. Yeah, so again, Bitcoin bounced all the way back. One of the biggest things I'm bummed out I didn't take here. I'm very bummed out I didn't take Bitcoin. Bitcoin, I thought it was a good buy when it dipped down to 55K. I thought it was a good buy. I hesitated. And again, I should have added to my position, but it's now at 67K. It's bounced up heavily. And I'm still a little bummed out about it. If you want to see Bitcoin, again, the big news is the ETH ETF is going to be going live pretty soon. Here's ETH. ETH is up to 3,500 plus a token share, or not a token. It's up to 3,500 plus. So yeah, we'll see what happens. Where do you guys think Bitcoin ends the year, Chad? I'm curious. What do you guys think? Where do you guys think it ends the year? Again, GM is at 5140s. Spotify up to 335, still holding here. Coca-Cola drops in about 1 minute here, so we'll get Coca-Cola up and ready to cover this. Again, I'm in Coca-Cola. Obviously, I have some bias. I want it to go up, but who knows what it's going to do. But yeah, Coca-Cola about to go live right now. BMW posted. MSCI posted. BMW aluminum shortages affecting production, but had contingency plan and has no impact on outlook or output, they say. Again though, Coca-Cola about to drop right now. Let's see what it shows. Coca-Cola at 65 or 64s. Will the weight loss drugs affect Coca-Cola? I think is the big question. That's kind of the big scary thing for a lot of people is, will these weight loss drugs negatively affect Coca-Cola? Their earnings are about to drop right now. We'll see what they show up as. Will this happen? Will these weight loss drugs negatively affect them? I don't know. Waiting for Coca-Cola right now. We got 5 minutes until 7. Okay, gotcha. Let me pull up Discord. All right, ETHE. So here's some. There's Coca-Cola shooting up to 65.70s, guys. So Coca-Cola posted second quarter EPS of 56 cents. They expected 80 cents, so 56-cent EPS. Let's see what adjusted EPS is. Adjusted EPS is 84 cents, so better than expected. 84 cents versus 80 cents expected. Revenue of 12.4. They expected 11.87, so better than expected EPS and revenue. We'll put this up on screen for Coca-Cola, but yeah, Coca-Cola went up. It's now kind of correcting a little bit though, to be honest, but we're in it right now. But it went up and now it's correcting some. It's all the way back down to 65.20s here. Somebody saw something they didn't like in Coca-Cola's numbers here. Look, there's Coca-Cola right there. high. But yeah, Coca-Cola all the way up to 65.80s. We're now actually technically green on the day also. But yeah, Coca-Cola posted pretty good numbers here. 84 cents versus 81 cents expected. Sales of 12.4 beat the 11.75 expected. EMEA unit case volume is at 0%. Latin American unit case volume up 5%. Second quarter worldwide unit case volume up 2%. Bottling investment unit case volume down 27%. North America unit case volume down 1%. Asia Pacific unit case volume up 3%. But so far so good for Coca-Cola. It's gapping up nicely. We'll see if that continues. But yeah, Coca-Cola so far so good. Green on the day. SPY still holding up there. So SPY still at 555. So let's see if Coca-Cola holds. Yeah, I don't drink sodas anymore, unfortunately. Or fortunately, or unfortunately, depending on which way you look at it. I stopped drinking sodas years ago, really. I'm not saying I haven't, like, struggled and drank soda, you know. But I don't really drink sodas anymore, unfortunately. I love Coca-Cola, too. Like, I really do. Like, I love Cokes. I drink a lot of them, you know, I have for a while. But the problem with them is that, like, you know, the real problem with them is that there's just too much sugar, right? You know, it's when you're young, you can eat whatever and drink whatever and do whatever you want, right? But once you start to get older, you know, you start thinking, hey, I want to be around for my kids going to college. I want to be around for that. And so sodas have so much sugar in them, I just can't justify it anymore. I would rather eat cookies than Coca-Cola. Cookies are probably healthy too. Healthier, I should say. Yeah. Tesla earnings are this evening. All right, guys. We still got 1 minute until 7. I don't know what I want to do. I was thinking about shorting Spotify, but I think there's also risks. All right, guys, we got 335.70s. Look at KO coming all the way back down to 65.20s. You know, and I usually like adding to positions on earnings that dip heavy, you know? So, like, where's UPS at? I don't really trust buying companies like UPS, though. There's risks. There's risks in buying companies like UPS. Because UPS, like, Amazon has gotten so... Amazon has gotten so... efficient. Yeah, Amazon has gotten. So, all right, there's the bell. So, do I want to short Spotify? I might try to short a little bit of it here. So it's definitely risky. All right, we'll short 10 shares. SPY's still holding up there, though. GameStop has kind of slowed down some too recently, huh? So there's KO turning them back around here, down under, technically slightly red. Again, here's the SPY. So Coca-Cola out. What else do we have dropping today? So we got Spotify, UPS out, GM, Coca-Cola out, Lockheed Martin out, Philip Morris is out, Polaris. Broken arm. Honestly, I got Americana the other day in jiu-jitsu. My right arm still not 100%. Like, I'm very good at armbar defense. So, like, my armbar defense is usually on point. But my Americana defense is weak. So, somebody Americana me the other day, and it hurt. First time afterwards where Americana. Like, I've never genuinely been hurt by an Americana. Except for the other day. You know, that time it actually hurt. I let it go loose. I should have tapped earlier. Yeah, Polaris is kind of the dune buggy things. Why did this kid just get hit? All right, so we're down a little bit on Spotify. I know this is a risk, to be honest. It's kind of the opposite of what I normally trade. We'll add a little bit more to this. Average price is 334s. And we'll probably cut it if it starts to break highs. We're just gonna get out quick. Let me get my. Yeah, we gotta buy out of this one if we're wrong, so I gotta get that ready. Alright, so we're shorting Spotify. We're long in Coca-Cola. UPS is down big, but it's not down enough for me to really want to buy it here. What do you guys think about this trade on Spotify? I like Spotify as a company, believe it or not. I think Spotify is a good company. But I also think it's a huge gap up on kind of mixed results that weren't that good. The guidance wasn't that good. The revenue wasn't that good. And so it gapping up 15+% on, you know, 4 out of 5 metrics missing on earnings is a little bit of an overreaction to the upside here. And I'm not usually one to play this strategy. I'm kind of playing around here this morning. So I'm not really one to usually take this type of strategy, but I'm trying it out. We'll see if it works. I just think extension is extension, you know, and I'm usually only long here in these type of setups, but we'll see what happens. Small little trade. We'll play with it. We just got 20 shares. All right, so now we're flat. We are now flat on Spotify. We're not down at all anymore, which is good, I guess. Okay, now we're up $20. What's the higher price right now? The bid is what I want, so let's buy the bid. See if it lets me get out of one share. Like, see if it'll fail me. All right, guys, SPY is up there. I personally get wrecked using leverage, so I love crypto with no leverage needed. Uncle Rico. Tesla drops earnings tomorrow. Or no, I'm sorry. Tesla drops earnings this afternoon. Okay, we got filled. All right, cool. Was it that bad of a fill? Wait. How is we only up $10? Did we lose $10 on that trade? Ah. How do we get in at 335 short? We're at 333s. I guess we're bouncing back a little bit. It's all right. We'll let it work a little bit more. We're actually green on the day, though, so that's good. I guess that's what I get for trying to, like, perfectly enter a position and exit a position. I mean, we're green when we were red, so, I mean, I got to be happy, I guess. But, bad fill there. It's all right. Ford. So I think Ford is having some positive reactions to, and we're in Ford, to GM earnings. GM reported earnings this morning. If you look at GM on the left side, GM gapping up a little bit, kind of helping my Ford position here. Yeah. You know what's crazy? You know what I find to be crazy? Like, you hear about Bernie Madoff. You know, one of the crazier things, right? Is that you hear about Bernie Madoff, right? But Bernie Madoff was only arrested for his crimes in 2008, not that long ago. You know, you hear this story and you think it's in the 80s and the 90s. Bernie Madoff was actually only arrested in 2008. He only got prosecuted for his crimes around the mortgage crisis and disaster, you know, which is kind of interesting. You know, Bernie Madoff used the Ponzi scheme. You know, if you don't know what the Ponzi scheme is, here, let me fix my camera. There we go. So again, one of the interesting things is that Bernie Madoff was only recently in 2008 prosecuted for his crimes. You hear this story and it's kind of like an 80s story of greed, but he was only actually caught in 2008, you know, and he did what's called the Ponzi scheme, where basically he gave investors the illusion of success by paying them from the previous investors' investments, right? So people would invest money, he would pay the previous ones with that money, and then he would pay them with, you know, more money he got in, and rinse and repeat that, and he looked very, very successful. It honestly tricked a lot of people. Like, Bernie Madoff tricked so many people. He's so notorious because of how many people he fooled doing this scam. You know, doing this scam, he got a lot of people with it, a lot of people. There we go. Let me take my profit here. All right, there we go. We locked it in. Another terrible fill here. Honestly, I'm getting disappointed. But anyways, back to this point. Bernie Madoff tricked a lot of people. A lot of people. You know, amid the global financial crisis in 2008, investors began requesting withdrawals totaling $7 billion. This guy did the Ponzi scheme up to $7 billion, and he couldn't meet the redemption request. Eventually he was exposed as you know, doing a Ponzi scheme. He confessed to his sons, who then reported him to authorities. So even more of kind of a dagger to the heart there. His sons turned him in. You know, thousands of investors and individual charities, institutional investors lost their life savings. Scandal had huge psychological and financial impact on everybody affected. And, you know, a lot of places closed down. A lot of businesses failed. You know, he was sentenced to 150 years in prison in 2009. And I believe he recently passed away. You know, he recently passed away in April of 2021. So, man, crazy, honestly, genuinely crazy. All right, guys, so we're here. We got a bunch of big earnings. Honestly, this short of Spotify would have worked beautifully. I just got bad fills, unfortunately, early in pre-market. But the short would have worked, or it did work, I guess. But it would have worked better if it, you know, if I would have gotten a little bit better fills. When I put these orders in, you know, I tried to get, like, I was up 25, 30 bucks. And so it took basically half my profits away on a bad fill from those. So, unfortunately, it is what it is. All right, we'll see if we can break down some more. All right, so looking at our poll numbers here, we got 220 votes. 77% are bullish, 23% are bearish. Got a new PA account. Hey, congrats, Far. They even said he defrauded cartel money, so jail was saving him from them. Yeah. Yeah, the Mets owner. A lot of people lost money with him, to be honest. So I did this little baby short of Spotify. And again, like, honestly, I'm going to go over, I've talked about the strategy a lot, you know, and again, the strategy's pretty freaking consistent, man. Like, you just have to be watching for it. You have to watch for the system, okay? It's very easy. And this was very small size. I could have made a lot more, and we got in short here, basically. I wanted to get in short here. I just couldn't take a position prior to 7 a.m. on toss, unfortunately, right? But again, the strategy is pretty much the same. This is the first time I've ever tried it short, but anybody that's watched the stream long-term knows the strategy I'm mentioning here. They know the strategy I'm using. They know what I'm doing here, which is essentially very simple. What I do is it's very consistent. I think the edge has got to be really high too. I look for stocks that report earnings, right? Like Spotify. This is the first time I've done it short though, and I'm probably not going to keep doing it short. You know, if my fills were better, it would have been a better trade, and we'll see what happens here. But again, I do the same thing every time. I look for a company to report earnings that kind of contradict the reactions of the stock, right? Spotify here had missed metrics. 4 out of 5 of the metrics on earnings, it missed. You know, Spotify, when we look at the actual numbers here for Spotify, all right, like, let me pull these numbers up. Spotify it beat EPS. It missed revenue by a pretty big number. It missed its monthly active users. So Sherwin-Williams just reported numbers too. But yeah, Spotify, let me go back to this one. Spotify missed its monthly active users. Its monthly active users were expected at 626. It showed up at 631. Or no, I'm sorry. Its monthly active users were expected at 632. It showed up at 626. Quarter 3 total revenue showed up at $4 billion. They expected $4.01 billion. Monthly active users showed up for quarter 3 at 639. They expected 650 plus, right? So this thing had multiple bad releases, multiple bad metrics. And it ended up gapping up a huge amount, 15%, which is, you know, a little bit extended in my opinion here. And we would have made more, but this sure didn't, you know. We got a bad fill here. But again, this thing gapped up 15% on mostly bad numbers, I would say. Mostly misses in terms of expectational numbers here for Spotify. And so for a company to miss numbers like this and still gap up 15%, I think there's some edge trying to catch the top. You know, and I think if I would have been able to get into this position higher up, like way up here, I would be feeling a lot better about it, you know. And we're still green on the trade, but honestly, I just got bad fills. I was trying to get out, and it just didn't fill me. Every time it filled me, it gave me really bad fills. You know, we have 5 shares left. I'll just let the 5 shares work. But regardless of whether this one makes me a ton of money or not, I think this strategy is something that I've been very consistent with. I've used this strategy a ton, and it works great. Honestly, I like using it on the downside better, though. So I like looking for healthy blue chip company, Apple, Amazon, Walmart, Target, Google, whatever you want to look at. And I want to look for a healthy blue chip company that gaps down massively on pretty good numbers, right? So if a company drops 20%, a legacy company drops 20% on pretty good numbers, I'm there to buy that dip. And that dip has been incredibly consistent for me as a trader. Like buying those dips and riding those bounces has been very profitable for me as a trader. And this is something that this specific earnings season I'm going to be watching for. You know, today we've got Tesla, Google earnings. We had a bunch this morning. No big reactions. The only big gap down that we've gotten from earnings today was UPS. And I just don't trust UPS as a company at all. I just don't trust UPS as a company. You know, I don't believe in these shipping companies long term. I just think there's massive risks for these shippers long term. And yeah, we'll see what happens. We'll see what happens. Ford gapping up a little bit today. We're actually still green on the day, mostly driven by GM posted numbers. And this is dragging up my Ford position. We're in Ford, and Ford is green, nicely green on the day from it. Yeah. Tesla's coming out after the closing bell today. Yeah, so today, those are most of the big numbers. We got like Comcast, we got Lockheed Martin dropping at 7:30 in about 12 minutes, but that's mostly all the big numbers today. We had Sherwin-Williams come out. But the big ones again today are Tesla, Google, ENPH, Visa, Texas Instruments, Chubb, Capital One. A lot of big earnings today. The biggest one with Tesla is Tesla's the one that we want to cover. All right, so hold on. I'm not saying it's bad. All right, here, hold on. Let me mute this for a second. I gotta mute this. All right, yeah, it's all right. Okay, got it. Wanted to check one thing. Yeah, Adobe, same thing. Adobe, here's the problem with Adobe, right? Adobe, everybody thought Adobe was going to crash and burn from AI, right? Everybody thought Adobe, and again, it was an understandable conclusion. There goes Spotify. Spotify was right back to where I wanted it, but it was an understandable thesis that Adobe was going to get replaced by AI and that you don't really need to do digital work in the same way that you like we did before we had AI systems building stuff, right? And that's true to a certain extent. And so a lot of people were really skeptical on Adobe. A lot of people thought Adobe was going to crash and burn and fail. And, you know, Adobe, where it shocked people was that Adobe adopted AI very well. You know, what do I mean by that? I mean, Adobe basically, instead of using AI as a threat to its business, Adobe actually did the opposite, where they adopted AI and they used AI to build some cool stuff. Now you can use AI to build some really cool stuff on Adobe much easier. And so instead of letting it work against them, they let it work for them. And Adobe ended up holding out really, really well. It's actually green on the year now. Hit lows of 433, but gapped all the way up to 550, you know, or gapped all the way up to over 500s from their earnings report a couple months ago, and now they're sitting at 550. So Adobe is a good example of working with a technology evolution, not against it, you know. The AI tools are just making graphic designers way more efficient as of now, not replacing them at all. Will eventually replace designers? Probably, but that's a ways out. Yeah, I agree with that. I think that's correct. You know, I think they're making things much more efficient. You know, here's Adobe. If you look at a long-term chart, you'll see what we're saying here with these big gap ups and gap downs. And I agree. I think people are using Adobe and companies like it to build some really cool stuff now. And I think AI is only going to make people use it more, not less. But I also think eventually AI systems are going to get to a point where they just completely replace, you know, digital design and workers. Yeah, I don't know anything about Chubb. What is Chubb? Easy. Yeah, Adobe adopted AI really, really, really well. All right, so we're back up pretty green on the day now from specifically Nike came all the way back yesterday. You love to see that. We're in Pfizer still. We're back up a little bit from Spotify. CrowdStrike dropped from 398 to 263. Oh yeah, CrowdStrike was one I was really kind of thinking about right now. CrowdStrike is down big. The problem is the range is obscenely high. You know, so like I'm worried about buying this dip because if CrowdStrike ends up dropping $5, $10 a share, you know, I mean, I guess if I buy small enough shares, it doesn't matter. It's only. All right, I'll buy up a little bit of CrowdStrike. We'll play with it. All right, so we're in CrowdStrike down here because we're only around the lows. We'll see what happens. SPY's starting to turn down a little bit too. What happened to my music? Can y'all hear that? Are we lagging? No. Let me exit out of some stuff. Adobe was doing fun until they started still. Oh, well. Any thoughts on Nike coming back anytime soon? So I bought Nike on a pullback. On that big dip that Nike had, I bought it on. And Nike's finally getting back up. You know, Nike back up to $75 a share, roughly. Again, I bought the dip, though, and, you know, we're still in it. I should have DCA'd into it. I think I would have made money DCAing into Nike, but I'm only going to add so much. I'm not going to take that huge risk. Yeah, I don't know anything about Chubb. CHUBB in company. I don't know anything about them. I know the short companies, Chubb, but I don't know anything about, like, is it a tech company? What's the symbol? CB? I mean, it's a big company. It's a large company. Huge gains on the year. It's up. It's up from about $200 all the way to 270s. So that would mean, percentage-wise, it's up about 30% on the year. It's a pretty good gain. It's a pretty good gain. It's up about 35% on the year. I mean, that's a pretty good gain. A little bit more than that, actually, because it was at 195s. But it's actually not quite at 270s. It's at 260s. So, yeah, it's about 30% gain on the year. That's still a lot for CB. But again, I don't really know what they do. A lot of people talking about security systems. Gotcha. BT used to watch you a lot back in 2019 and 2020. Good to see you're still doing your thing. Hey, thanks, Chris. I appreciate it, man. Yeah, we still stream. We've grown a lot over the last 5 years. Mostly, we cover economic reports. Right now, it's the slowest month of the year, viewership wise. So like if we look back at last year, we see a very similar trend where views go down a lot in July and back up September is really when they kind of start to get better, right? But you'll see, like, we kind of pivoted to more broad stock market stuff. I know back then we used to cover penny stocks a lot. Now we mostly day trade, futures if we're gonna day trade. But we also cover economic stuff, stock market earnings, stuff like that. So we kind of pivoted to economics and stock market, news instead of just strictly day trading. And so that's kind of the channel. But again, that has treated the channel really, really well. We cover a lot of like Jerome Powell stuff. So like if you look at the channel as an example. If you look at the channel back, like our economic reports do really, really well. Like CPI, we got 20K, PPI 10K. Jerome Powell, we got 25K. So like our economy stuff does really, really well. We still day trade though, but it's just less centralized to day trading, if that makes sense. But yeah, welcome back, brother. Again, so right now we are shorting Spotify. We're shorting Spotify. We bought up a little bit of CrowdStrike just because it's down so much. Very small positions, though. I'm not risking a lot with these. And if this starts to really flush, I'm cutting it very quickly. Like, if we crack... The reason I'm getting into CrowdStrike, I'll show you guys. Like, I'll show you the trade idea here. And you got to be careful with stuff like this because market makers, and they kind of know, right? So they kind of know what you want to do. So here's the low. Here's the low at 261.50s. This is the low of the last year straight, right? This is the yearly low right now at not quite the yearly low. It looks like the yearly low was this the first? Yeah, so the yearly low was actually at 238s, but when you ignore that, this is basically the last 6 months low down here. And it's very obvious, it's very transparent, it's a very obvious risk system here, like right here at 261.50s. So I am going to go long here on CrowdStrike. And again, I'm not an investment professional. I'm not liable if you lose. Don't sue me. Not an investment professional. No idea what this is going to do. It might be wildly different than what I think it's going to do. But the point is, my risk level is really, really obvious. Can y'all see this? Let me make sure you can see this. My risk level is super obvious down here. Y'all can't. Okay, let me show you. My risk level is super, super obvious down here. That's my risk level. That's what we're watching. Yeah, that's what we're paying attention to. So if we crack underneath this level here, we'll just get out. I'm just not going to play with that. We're not going to risk that. But as long as we can maintain over this specific level here, which is my risk right here, then we'll stay in it and see if we can get a nice little rebound from it. Again, we're still in Spotify. I mean, you could try, Top 3 least suable traders in the world right now. I always tell people, it look bad to try to sue me. Like, I don't tell anybody to do anything. People ask me all the time. People ask me all the time, people ask me all the time what I should do, what they should do, and I always tell them the same thing, which is, I have no freaking idea what you should do. He does well enough for me to watch every day. Yeah, I mean, I got a nice little risk level there at 261s, I think, Ty. So, like, my risk level at 261 is fine. Yeah, I can't tell if Tony's an actual hater or just like joking with me, This is his first post ever. I don't know how I feel. Can y'all hear anything right now? So listen, the music just cut out for me. Maybe it's Epidemic Sounds lagging. SPY's trapped over, or just popped over highs. It's now starting to come back down a little bit. Whose earnings do we have this week? We got Tesla today, Google today. We got a lot of earnings today. Tesla, Google, Visa, Enphase, Texas Instruments, Seagate, Chubb, Cap One, Mattel, a lot of other ones, and then that's basically all the big earnings for the rest of the week. We got like AT&T tomorrow morning, a couple other small ones, Thermo Fisher, Chipotle, Ford tomorrow afternoon, IBM, VKTX, Las Vegas Sands, and then Thursday we got American Airline, Royal Caribbean, RTX, Honeywell, Hasbro, Southwest, Dr. Pepper, Harley Davidson, Valero. And then Thursday evening we got basically nothing. So a lot of the earnings, it's interesting, like most of the other big earnings are next week, not this week. But this week we got Tesla, so we'll see what happens. His A1 nonpartisan pity trades. Pity trades? Nah. So the music stopped too? Okay, gotcha. UPS showed up at, let me see. UPS showed up at 179. They expected 199, so a miss on EPS. Revenue showed up lower than expected as well at 21.8 versus 22.18 expected. Fiscal year revenue came in at 93 versus 94.5 expected. They are doing a share repurchase program and targeting $1 billion annually in that. But yeah, UPS is down big on that report. CrowdStrike is up a little bit though, which is, or no, maybe this is not too, maybe this is too zoomed in. So CrowdStrike testing that previous closing price. We're still short in UPS. Somehow we're still green on the day in equities. Yeah. Yeah, anybody that actually hates me is like, they hate me for their own personal reasons. You know, maybe I'm just like really handsome and I have this awesome community, and so that makes them feel some type of way about it. But outside of that, anybody that hates me outside of that, it's just kind of, they're desperate to hate. Like we don't tell people anything. We literally tell people we have no idea what we're talking about, not to copy us. I don't tell people to do anything. I don't sell a course. I could probably make millions of dollars with the following I have selling you guys courses. I genuinely could. Like high ticket sales, or the way you make money on social media, is by selling courses. Selling courses is how you make money, right? Everybody does it. I told people I wouldn't do it, and I'm not gonna do it. But I promise you I can make millions of dollars more doing this if I wanted to, selling you guys courses. I tried not to because I'd really just rather be honest with you guys. And my big thing is more economics anyway. And so economics is kind of what I'm the most passionate about and interested in. And, you know, that's really where we get our big views from, is like Jerome Powell, FOMC meetings, which we have. The next FOMC meeting is in a week and a day on the 31st. That'll be big. But yeah. I'm here because I like everyone. Thank you, Freddie. Appreciate it, bro. Thank you. I don't buy courses. They are readily available on the internet. Yeah, I always try to tell people without telling people, like, look, you know, I'm not saying you could download and find a lot of these courses available for free on the internet somewhere without having to pay a penny for it. I would never recommend you guys do that, you know, on the internet, where you could readily find most available things on the internet. I would never tell you guys to do that if you really are desperate to look at some of these courses. You know, I would never recommend that. Here, I'm going to exit out of Epidemic Sounds. It's acting kind of laggy here. I would never, ever recommend that you guys do that, you know. Yeah, so Epidemic Sounds is acting kind of funky right now. Let's see if we can pull it up somewhere else. You know. Yeah, I think it might be just Epidemic Sounds. There we go. Ouch! Sorry. Alright, that's what it was. So this is just Chrome. Alright, so we did have CrowdStrike bounce up a little bit. What dropped? Oh, Disney. Disney's crapping down here. It's down to $93 a share for Disney. So Disney's Q2 results showcase the strength of its leadership in streaming. Last Thursday, Netflix reported its second quarter results reflecting strong, and this is by Benzinga, quoting, reflecting strong growth in advertising and increase in global subscribers. While the Walt Disney Company and Warner Bros. Are about to launch their streaming bundle, Netflix is staying out of any combinations with its rivals as it succeeded to remain a go-to streaming destination for users. But I'm wondering why Disney's gapping down significantly right now. Does anybody know? Disney's gapping down fast here. Look at Disney. Here's Disney, down to $93 a share. I might add a little bit down here. We're not down enough to really be that fearful of this, and we're not in a big enough position to really be that fearful. But Lockheed Martin just posted 685s. BDPS estimates of 646, revenue of 18.12 versus 17. Yeah, and again, guys, like, so I realized where a lot of the haters are coming from. Like, so I've had a couple people that, like, I don't know if they're just kind of like users of like substances, but like they tried to work with the channel historically. Like they wanted to come on my streams basically a lot. There's a couple people that are like this, and you know, anytime I would restrict them coming on stream, a bunch of hater troll alt usernames would show up talking smack, like insulting me, and then, you know, eventually they'd be all friendly with me again. And so it's very likely that they are kind of one of the trolls on the channel. And so with that said, I just gotta avoid them, ignore them, you know. It's one of the reasons we stopped letting other guests come on the stream. The only guests I would let come on the stream are people that I've never had on stream before, you know, except for maybe like Mitch. Mitch is one of the ones that I'd probably still let come on stream because he's a friend. But everybody else is kind of, you know, I don't really trust them. When did you get started in stocks and what got you started? Yeah, I mean, honestly, I'm kind of buying it up down here. I don't mind adding like some small positions here to fix my average a little bit. Like, it's a small position. I don't have a large one here, and it's down enough to where I could probably get into a good little trade. We'll see what happens. SPY pulling back a little bit. I'm still in Spotify. I'm still watching CrowdStrike also, and I'm still in Nike. CrowdStrike is actually flat now. That's nice. Yeah, Mitch came on the stream like a month ago or so, maybe a little bit over a month ago. Yeah, he's doing his thing over at Trade the Pool, so y'all go check them out. Trade the Pool. I think he's working with Trade the Pool now. Yeah. All right, so we're slightly green at CrowdStrike here. Slightly green. I'm still in Spotify short. I don't know if I should cover that position yet. I'm basically flat here in Spotify. I'm actually green on the day on Spotify somehow. What books do you recommend? War and Peace. Where the Red Fern Grows. You know. Are you talking about trading books? Trading books are... I'm one of those people who don't believe that you should watch trading books. Trading books do essentially nothing. Like, if you're going to learn about trading, books are not the format you want to learn it on. You know, I think we've evolved technology-wise past that to where most people don't learn it from books in the same way. Like, books are good if you want to understand what it's like being a trader or investor. You know, maybe you want to hear some stories about like figures in the stock market and trading worlds. That's one thing for books. Outside of that, you're not going to learn strategies from books unless it's like investing strategies alone. Like, maybe you can learn investing in books. You're not going to learn the subtle nuances of trading in books. Not except for maybe psychology-based stuff like Trading in the Zone. Mark Douglas, a great example of that. But outside of that, you know, yeah. Yeah, Comcast had slightly good numbers. I hate Comcast, though. I'll never buy them. All right, so our CrowdStrike trade's actually treating us well. CrowdStrike is bouncing up a little bit. Disney down, though, and that's all right. Again, we're in just a little small trade on Disney. CrowdStrike back up, though. Yeah, so CrowdStrike's still down a little bit. Poker player. Poker's good. Poker's about, if you want to understand trading, understanding variance is key. Same thing with poker. Poker's all about variance. Like once you can understand variance and understand how it impacts your results, poker's easy. You know, you stay selective with hands. You play 20% of your hands. So you learn how to 3-bet. You learn how to play a tag style, tight and aggressive. You know, once you do that, you know, it's just about getting enough reps in poker to be able to profit. Same thing with trading, right? Like once you learn trading strategy systems, it's just about getting as many reps in. Trading physiology? I mean, CrowdStrike back up to 266. SPY at 555, 30s. Spotify's still there. Again, we're short. We'll cover it if it breaks over this level here. Again, Tesla. Let me put Tesla on screen. I didn't even put it on screen. Here's Tesla. Tesla very green today, up to 255. So will Tesla have good earnings today, chat? I don't know. We'll see. Disney's starting to bounce up a little bit. Comcast did report some numbers here. GE Aerospace CEO says company's new engine output was disappointing in quarter 2, 20% down sequentially in the conference call. They said the company's new engine, yeah. So Tesla up to 255s. Their earnings are expected today as well. They are expected today at let me post this here. Yeah, so Tesla is expecting 59-cent profit per share on 24.97 billion in revenue. We did have a lot of earnings today. The only real one that missed, like we had a couple misses here. The only real one post this on X. Alright guys, so Comcast did report better than expected results. I'm trying to look up their numbers too. All right, so Spotify coming back down. Is the music too loud or is it just right? It depends. What's my favorite time frame? It depends on what kind of trade I'm taking. If I'm taking a longer term trade, a longer term time frame is probably the best. If I'm taking a shorter term time frame, I use 1 minute or 5 minutes. It just depends on what the time frame is I'm looking at. All right, so Yeah, so again, we did have a bond. Let's see. So U.S. is going to sell 69 billion of 2-year notes today. What's the yield on 2-year notes? I would assume 2-year notes are going to give you over 5% right now, considering short term. I mean, I know the yield inversion is there. Yeah, so honestly, this is the yield curve inversion that people are talking about, right? So when you hear yield curve inversion, like, let me put this into perspective for a lot of people. A lot of people don't really understand. Yeah, so I turned it down. Let me know if that's better. But no, so a lot of people don't understand what the yield curve inversion is. Okay, the yield curve inversion has been used. I'm going to preface what I'm about to say with it's been used as a tell of economic weakness. So people use the yield curve inversion to say, hey, a recession, depression, market crash, whatever is coming, right, from the yield curve inversion. What does that mean when they say yield curve inversion? That means that short-term bonds are currently paying more than long-term bonds, right? How do we see this reflected? Okay, where we see this reflected is like an example of this is 2-year treasury notes, which is 2-year treasury bonds, are currently only paying out 4.71%. 4.71% for 2-year notes, meaning if you invest in treasury bonds right now that mature in 2 years, basically you're going to loan the U.S. government $100K, right? Here's an example. You're going to loan the U.S. government $100K. Annually, you're going to make 4.71% on that $100K. So annually, you're going to make about $4,700. From that $100K, you're going to make about a little bit under $5K. In interest, and then at the end of that 2-year period is the maturity date. That's when they're going to pay you out, your 100. They're going to give you your 100K back. So you're basically loaning the U.S. government 100K for 2 years in a 2-year treasury note, and it's paying you 4.71% annually in interest payments. Right. The problem here is that short-term bonds right now, like what's a 1-year paying out? I know I'm invested in T-bill right now. T-bill is paying out over 4.7%. It's paying out like 5.3%. As of yesterday, the 1-year bond is paying out 4.88%, right? Which again signals short-term bonds like 1 year. What's a 6-month? What's a 3-month bond paying out right now? What is a 3-month bond? I think it's called a 3-month bill pay. So 3-month bonds are paying. I know T-bills paying out over 5% right now. So short-term bonds are paying way more than long-term bonds right now. Yeah. So a 3-month treasury bill is paying out 5.4% right now, which is crazy. It's crazy, honestly. Like, why would you ever make more from shorter-term investments than longer-term investments annualized? It just doesn't make sense, right? And this is the yield curve inversion that people are talking about. And so what does this mean right now? It means that, number one, if you ever wanted to buy up freaking short-term investments in treasury bonds, now might be a good time to do it. Number two is that it could precede economic or market weakness. And I'm not saying it does. Nobody freaking knows what happens here, but it could precede market weakness and economic weakness. What do you guys think? Do you guys think we see economic and market weakness moving forward? I don't know. To be honest, I don't know. Disney bouncing up a lot today, so we're almost flat in Disney. You'll love to see that too. We're actually green on the day now. Nice. Coca-Cola is helping me out. My Spotify short is paying me as well. Let me catch back up in the chat. Talking about tax credits. Over 5 easy. Yeah, I would assume like that's when I looked up 2-year treasury bills or notes is what they're called. I assumed that I was going to pay at least over 5 right now. Why? Because freaking 5% is what short-term bills are paying, but I forgot about the yield curve inversion right now. No, I'm not an AT&T radical. Yeah. All right, so Disney again bounced all the way back. We added to it at the bottom, and so that's helping our current position here. Again, we're shorting Spotify still. Very small trade, very little playful trade here. We'll see what happens. Tesla testing highs, SPY pulling back a little bit. Again, they've been really grouping the economic reports with each other a lot. They've been grouping the economic reports together to where Again, Wednesday we got flash and we got flash services and manufacturing, PMI, and new home sales. Today we have existing home sales. Not a huge report, but somewhat relevant. Thursday we got GDP data, and GDP is expected at almost 2% at 1.9%. So GDP, again, this is the initial estimate for GDP. It's expected at 1.9%. Jobless claims are expected at 237. Durable goods expected at 0.6%. Friday we also have PCE data, inflation data. Right, so yearly PCE data for core PCE is expected at 2.5%. So personal consumption expenditure index data expected at 2.5%. So inflation has been going down in their metrics here. And then next week we got a lot of stuff, which is good, you know. All right, so Spotify still coming down some here. Disney bouncing up. Wow, host, it looks like you're coming around to the fact that this economy is in bad shape. I mean, what makes you think that? I'm not saying the economy looks weak or is going to be weak. I'm certainly not saying that. And I don't necessarily believe that, at least not for this year. You know, I don't think the economy, you know, again, I'll go back to the root of the problem here. Is I think the root of the problem is political news makes people think it's the end of the freaking world every single election year. And it's just not true. It's just not true. In fact, when you look at markets, the truth is actually on the other side more so. You know, and I think a lot of people need to take a step back from political news and genuinely try to think about, like, the nature of it all objectively, right? Like, I'm not rooting for any of them. I dislike all of them, you know. The problem is that during election years, every single election year, people try to act like it's the end of the freaking world. Every single time, like clockwork, it happens. It happened in 2016. It happened this year. Like clockwork, it happens. My problem with that is that it's sensationalist. It makes people think that it's always the end of the world, and it makes people make decisions that they wouldn't otherwise make if they had objectivity going on. And again, I'm not saying that the economy is not weak. What I'm saying right now is that the weakness in the current economy is not from a lack of buying, or which would signal a recession or depression, which is what the inversion of the yield curve historically has signaled, is too little spending, right? That is the opposite of the current economic landscape that we're in right now, is not too little spending. The problem is too much spending has occurred. Inflation has been a problem because of it, right? And so again, I've never been one to say the economy is perfect. What I'm saying right now is that the weakness in the economy is not from too little spending, which would signal a recession or depression. That is not the current problem, even though that's what a lot of political news will tell you, because they want their side to get elected, right? And again, I don't care who. I mean, I'm very neutral in all of it. I guess my point is, like, the problems that we currently face do not have anything to do with too much economic weakness. We just don't see that in any of the data, in any of the reports. And when you look outside, nobody's really struggling to find a job right now. Like, not in general, at least, you know. And so I think we have to call a spade in that way, and we have to look at it honestly. But again, it's all love here. Like, I think these are good conversations to have, and maybe I'm wrong. I certainly could be wrong. I don't know. But I just think that we have to identify what's actually the problem right now. And what's actually the problem is too much spending has occurred. Inflation has spiked. And I think lowering prices of real estate just to kind of pander to people involved directly in real estate to help their business is going to make prices worse. It's going to make people more unhappy. And then people are going to complain about that, you know. Why has the yield curve reversed then? Well, there's a lot of nuance there. Again, it's not the end all be all of recession, depression indicators, right? Like, I think you have to look at unemployment. You have to look at the labor market specifically, you know, to judge weakness in the economy or not. You have to look at spending, you know. You got to look at spending, unemployment, the labor markets, right? Those are the big three. Like, the technical definition of recession is 2 consecutive losing GDP quarters, which we're not in, you know. So I don't know. It's all good though. I appreciate different perspectives, and again, maybe I'm wrong. I certainly could be wrong. I just kind of get tired of people screaming recession, depression every election year because they've been watching the news, and the news wants you to think it's the worst it's ever been, and the other side wants you to think it's the greatest it's ever been, and the truth is usually somewhere in the middle. Yeah, so Tesla's still testing these highs up here. Yeah, for sure, Zane. He said, I agree the polarity is insanity. It's crazy common grounds are so hard to come by, for sure. Right. Like what ends up happening though is like, again, you get people coming from political, bias and they start arguing for different things. And a lot of them don't really understand it. They're just kind of arguing for their side, and if their side is the side currently in power, then they're trying to argue that the economy is the best. And if their side is the side currently that wants to get elected over the current power side, then their side is going to act like it's the worst it ever is. And again, the truth is usually somewhere in the middle there. And I think that's a very hard thing for a lot of people to look at objectively because they've been so kind of, but again, truth is somewhere in the middle, usually with most things. I'm a moderate in that way. I'm very neutral. And I get it. It rubs a lot of people the wrong way. To be honest, though, even if I had political opinions, I wouldn't be vocal about it on YouTube. It just doesn't make sense for me to, I mean, there's pros and cons for it. But again, I'm pretty neutral. I like to play the devil's advocate. Like, I like looking at both sides and kind of talking about it. It's a good conversation to have. All right, guys, we got 300 people here. Hit the like button. My girl just got her NBA. I was about to say, man, she must be really, really tall, huh? From Penn State. No, I'm just messing with you. But no, I get it. Right, but again, CWC, again, I think something that I've been very clear with is that I'm not saying the economy is perfect right now. There's problems and risks and people are unhappy, certainly, right now. But that does not mean that we're about to hit a recession and depression. A lot of people hear people are unhappy and they think recession, depression, and they just really push that idea, especially political people, right? But again, that's just not what we're currently in, unfortunately. And I don't know, fortunately or unfortunately, what we're currently in is too much spending has happened. Prices have gone up too much, and we should not cut rates. That's my stance. That's been my stance for months, really for long periods of time. I think the problem that I see a lot of facing us right now is that, again, people made a lot of money when interest rates went down in 2021. Prices went up 60, 50, 60% in real estate. And that caused a lot of people in those businesses to thrive. And they are desperate to thrive like that again, right? So they ignore all the other red flags of like prices going up and prices rising and prices going up. And so they stay stuck on this mode of like, hey, prices we need low interest rates. We need low interest rates. But the problem with low interest rates right now is, again, it means prices are going to go up again. And I don't know if that's what anybody wants right now is higher prices. I know if prices spike to 10%, if people think they're unhappy now, they're really going to be unhappy. And that's the risk of lowering interest rates. I do think we should pay attention to the economy, though. So I do think we should watch the economy. I think I said this yesterday or the day before, I think if unemployment spikes up to 4.5%, I think if the labor market cools dramatically, I think if inflation gets close to 2.5% or to 2%, depending on whether we're looking at PCE or CPI. CPI, if it gets close to 2.5, 2.4, maybe we could argue a little bit more about rate cuts. But I think until we see those negative signs, the yield curve has been inverted for a while. Yeah, I mean, 7% is not like the worst on average, Right, exactly, Joseph. He says the economy is impossible from 4 years ago. Nobody can afford anything. Exactly right. Yeah, I mean CWC, man. I'm going to tell you this, and it's all love here, but I don't know if you actually understand what a technical recession is outside of googling it right now. Like, a technical definition of a recession is 2 consecutive losing GDP quarters, right? GDP is expected to grow at 2%. You know, and we'll see what happens Thursday. Thursday we get initial estimates of GDP, but we're just not in that. We're not in a recession right now. You know, and I get how people are unhappy. The real reason unhappy is if you scroll down to Joseph's comment. His comment is exactly right. People are really unhappy because prices have gone up so much. Cutting rates will make that problem worse, not better. Cutting rates will bring prices up dramatically because people are going to start spending more, and when people spend more, prices spike. It's one of the most obvious correlations in economics, you know. Yeah, 7% is 7%. It's actually, it's near the middle range of things, you know. Yeah, Joseph. Yep. And I think real estate can do with a correction. I think it needs a correction. It needs to come down a little bit. Yeah, I think prices need to correct. They need to drop. They need to come down. They need to decrease. And again, the only way the prices are genuinely going to decrease is if we push the market down a little bit, the economy down, I should say. It needs to happen. It's necessary. All right, guys. All right, so SPY started to bounce. Tesla's starting to finally dip down some here. We'll see. Yeah, we're going to cover both today, Google and Tesla for sure. The issue is the economy is being propped up. Low-income consumers are completely spent. Middle class is nearly spent. Excess saving data shows all of this widely wiped out. Exactly right, Sass. And again, I think this is what people have to understand, right? Like, this is the biggest confusion I see people make, right? I've said this the last few days, but somehow, like, real estate agents, lenders, mortgage brokers have convinced people that lowering rates is somehow going to make the average Joe better, right? And that is, again, the complete opposite of the truth. Lowering rates is going to do what, Chad? It's going to allow people to get more lending. An increase of lending means what? It means more spending is going to happen. When more lending occurs, more spending occurs. So sure, it might help GDP go up more. But what's going to happen in return is prices are going to spike up more. Inflation is going to get worse. And so if people are unhappy about prices now, it's because prices don't go down. And prices spiked up to 10% a few years ago. And they haven't really gotten back to normal. And normal, this is the new normal to a certain extent. But again, the problem with lowering interest rates, it's going to stimulate spending in a way in which people spend more. And what happens when people spend more? Prices go up. You know, real estate prices need to correct. And the way you make them correct is by keeping interest rates high. If we don't, problems are going to get worse. You know, and I think this is something that really a lot of people don't understand. All right, so Spotify is still pretty flat. We're still waiting here, stagnant in the market. We are in CrowdStrike. CrowdStrike's green. I'm still in Spotify short. I'm getting a little bored of this one, though. I've been in it all morning. Yeah. We need higher for longer. 100%. Who needs a 100K F-150? Right. Like, who needs a 100K F-150? Who needs a $500,000 house if you're making 40 or 50K a year? Nobody does. Like, that's an unreasonable expectation out of those people, and they need to live within their means and only buy houses that they can afford. And it's not always the best time to buy a house, because what's the purpose of buying a house if you buy a house and then get a massive correction? It just doesn't make sense. Tesla, yeah, Tesla's up big today. I don't know what Tesla's gonna do. Tesla, I'm in Tesla. I want it to go up. We're gonna be streaming their earnings later on. Yeah, it's all good, CWC. I know, but again, CWC here, like, so, and again, it's all love. He said, host, you go by government numbers. I understand. But one thing that I see pretty regularly from you, and again, I'm going to preface this with, again, it's all love here. But one of the things I see regularly from you is you say, hey, hey, you're not looking at the real numbers. What I see is ABC. And your ABC are mostly things that signal increased spending, or signal prices are too high, so people are unhappy because higher prices. So what you're saying actually confirms what I'm saying, which is that people are unhappy. They're unhappy because they have to work multiple jobs. They have to work multiple jobs because prices are so freaking obscenely high, and that is causing massive problems, and that is causing unhappiness in everybody because prices are so high, right? And when prices are high, people are unhappy. What I'm saying is that cutting rates is going to be the sign. Cutting rates is going to make that much worse. They're going to make those unhappiness people much worse, in a much worse spot, Right. Like, people think they're unhappy now. If prices go up 10%, what do you think is going to happen? What do you think is going to happen to credit card debt? What do you think is going to happen to everything, right? It's going to get worse. More people are going to, lose things, and prices are going to be way too freaking high. It's important to understand. I'm going to go ahead and cut Spotify. Oh, no, I just added to it. And again, it's all good. Like, it's a good conversation. I think it's important for people to hear this conversation because, again, I think a certain group of the population tries to make people think that cutting interest rates is going to help them. And I don't necessarily think it is. I think it's going to make things worse. It's going to make the problems worse. But again, during election years, everybody wants the economy to thrive because it's easier to get elected when the economy thrives, right? So what do they make people think? They make people think it's all great. Everything's good. Or they want things to look great, not necessarily be great. And so by lowering interest rates to consumers, it's going to allow spending to increase. And if you take a snapshot of the economy, it's really easy to sell an economy that has a lot of spending as thriving, right? But again, the problem is that it's a double-edged sword. It's kind of a pick your poison event. I mean, if you don't want to cut rates, then you agree with me, CWC, about everything, Again, the overarching point I'm making here is that the economy is not rosy, and this is verbatim something I've said many times, right? Like, the economy is not rosy. Things aren't perfect. There's problems for sure, but the problems that people have right now are from prices being too high over the last 5 years. They don't go back down, and we're still getting a lot of pressure to cut rates, and that's going to exacerbate the problem. It's going to make it worse, not better. So if that's your stance, then you agree with me. If rates drop, what should one put money in? I mean, that's a tricky subject. Like, it really depends. Historically, rate cuts have caused negative reactions in markets, but that's mostly due to generally when we cut rates, it's usually because something looks broken. And again, if that was the case here, I would say, you could buy bonds or something like that. But I don't think anything necessarily, it's tough to tell, right? Like, if we look at history, so cutting rates stimulates economic growth, boosts the stock market, weakens currency, inflation gets worse and it reduces unemployment. So cutting rates will make the economy stronger in that way, but the problem right now is not from a weak economy. The problem right now is from prices being too high. You know. I agree with you on rate cuts. Where I disagree with you is that we're not in a recession right now, and I think we are. Okay. So CWC, and again, this is a good conversation. That's the reason I keep going back and forth with you. So again, it's all good. Like, as long as it stays respectful, it's a good conversation. With that said, though, okay, so what you just said, you think we're in a recession right now. Okay. What do you think has caused the high prices that we're currently facing? Like, what do you think has caused that? What do you think the root cause of the prices that we currently are facing right now, the high prices that everybody's unhappy with? What do you think caused that? SPY is down to 554, so SPY is dipping down. We're slightly green, but again, we got a lot of big earnings that come out after the closing bell. You know, I definitely disagree, CWC. We're just not in a recession. Maybe directly after 2020 during the pandemic, that's when we were in a recession, or that's when we were close to it, you know. You know, the last time we had negative GDP, again, so here's the thing, right? Like, this is what happened. All right, so for a lot of people that don't understand economics, I'm going to go through it right now. The last time we had negative GDP was the second quarter of 2020. The second quarter of 2020. All right, the second quarter of 2020, we had 2 consecutive losing GDP quarters, right? And so by the technical definition, we could have been in a recession in that period of time, right? But that was following the pandemic. Of course we were. We were following the pandemic. Nobody was working. Nobody was spending. Everybody was struggling. And the pandemic was in effect, so everybody was stuck at home too, right? That was the last time we were in a recession. Since then, though, GDP has been positive since then, right? The problems that we're currently in are the opposite of a recession, where we've had too much spending has occurred. Too much spending equals higher inflation spikes, and you can kind of see this here. You know, so if we look at CPI inflation graph, right? Let me see if I can find it. If we look at CPI inflation, okay? So here's CPI inflation. One of the things that you'll see is that generally during signs of a recession, okay, those are some of the only times that you'll see inflation actually go down. Not just slow down, but actually decrease. All right, so what do we see this? We see this slightly here. We see it definitely in the 2008 and 2009 mortgage disaster, where we saw prices genuinely go down from an actual recession after following 2008. That was the last time we really had those prices. You know, the closest we've come to a recession is, as I said, the second quarter of 2020, where you can see prices almost went negative. You know, those are the only time prices ever go down. But the Fed stepped in, printed a bunch of money, did quantitative easing, sent out stimulus checks. And this ultimately, like, we were in a slight recession, but we're no longer there, obviously, because, again, the consequence of these things is an increased amount of spending, you know? And so, again, I get it. People want to say, like, I get it. Like, I think a lot of the bias, and I think this might be true with you, CWC, is that you side one way politically, right? And so you want the current administration to look the worst they could, right? And by doing so, you're basically saying we're in a recession, right? But it's not true versus the technical definition of a recession. And I'm not necessarily against you. I'm not for you either. But I think that's where your bias lies. And again, maybe I'm wrong. Like, it's all good. You know, we can have these conversations and it's all good. Hey, what's up, Daphne? GDP is only high because all the billions and yeah, I mean, look, GDP is high because we've printed a lot of money over the last few years to save the economy from a recession, you know, and that's the consequence of printing money, is it saves us from a recession, but it makes inflation worse. You know, that's why they do it. That's why they do QE. Yeah. Anyways, it's all good. Good conversation, you know. Good conversation. All right, guys. Yeah, that's again, we printed a lot of money in 2020. We stimulated the economy through money printing, quantitative easing, stimulus checks. We brought interest rates down and cut the federal funds rate to almost zero. And so, you know, the consequence of stimulating the economy in that way, the benefits are that it saves us from a recession or depression. And that's exactly precisely what it did. Like if we look at, what's the other one I look at? If we look at the federal funds rate, right? Which is what the Federal Reserve is controlling through interest rates. If we look at the federal funds rate, right? The reason the Fed brings interest rates down this much is to save us from the economy, or from economic weakness, you know. The Fed doesn't raise rates and pause rates like when we're in a recession. That's just never about to happen, you know. And again, I think you got to take a step back from political bias. Understand, I'm not saying things are perfect. Economically, I think there's a lot of problems economically, right? But it doesn't mean we're in a recession. It doesn't mean that, like, I get people might want to call it recessions because, you know, recession sounds bad. But again, the real root of the problem is we're in the opposite of that. Yeah, exactly, Corey. Being a recession isn't a subjective thing. There's an actual definition for it, 100%. I mean, again, I get it. You like, again, it's all good, CWC. Like, it's all good, bro. I believe, again, what I think, again, I'm gonna be honest, is I think you're biased politically, and so you want the current administration to look bad, and saying we're in a recession makes them look bad. Right, but we got to go by the technical definition of a recession, brother. You know, we can't just say it just because we want them to look bad. The real root of the problem is the opposite of that, which is too much spending has happened over the last 5 years, and people are genuinely struggling because of the massive price spikes that we've had, you know. But again, like I said, it's all love. We could agree to disagree. I don't want this to get too long-winded, you know. And so good conversation, but again, we're going to agree to disagree there. Anyways, Tesla at 254s right now. Tesla earnings are probably one of the biggest spurs of this market. And again, we got GDP dropping on Thursday. We'll see what that looks like too. Yeah, I'm not even disagreeing with you, CWC, in that front, you know. But I think we have to go by the technical definitions. All right, guys. Anyway, SPY at 555s, Tesla at 254s. Anything else moving this morning? I'm trying to see the other stock market news. What else we got? All right, so Taiwan suspended stock trading on Wednesday due to the typhoon overseas. Airbus, head of industrial supply chain, says it will not be a perfect trajectory, but they are still aiming for a rate of 75 in 2027. You know, I know Boeing has had a lot of weakness over the last couple months from all the bad press that they've gotten. But I also know that, like, Airbus is their biggest competitor. And so Airbus thinks they're going to produce 75 vehicles. I'm not sure how many Boeing produces. How many vehicles does Boeing produce a year? Somebody help me out. Let me see. AI, come to my rescue. All right, so how many planes does Boeing produce each year on average? Let's take a look. Let's see what they did in 2024. SPY still basically flat. So Boeing produces around 500 to 600 commercial airplanes each year. In 2023, they delivered 528 commercial, which was a 10% increase compared to the 480 delivered in 2022. So let's see Airbus. Just in terms of like correlation and size. Okay, so Airbus actually delivers more. They delivered 661 commercial aircrafts in 2023 compared to an increase to 611 in 2022. So again, Airbus is producing more planes as well. By rate, they must mean something else. Yeah, quarterly earnings for Tesla today. Yeah, all good. Yeah, we're going to be streaming Tesla earnings today for sure. All right. Yeah, I mean, so Yair, I don't know if you actually understand how Apex does things, brother, but the way Apex does things is that they process payments for a couple days starting on 2 specific points of the month. It starts on the 5th of the month, I believe. They start processing payouts, and then they start processing them again on the 15th of the month. And so if you miss that window, you got to wait until the first week of the month next month to process a payout. This is how it's always been, Yair. And so saying they're not processing payouts right now, you know, is how they've always done things, brother, you know. What do you think Tesla earnings report on margins? So Tesla is expecting, like I went over this report yesterday for Tesla. So here's Tesla's EPS graph, right? So let's take a look. So Tesla dipping down a little bit here. So the quarter before last, they posted a really nice 226 EPS. Last time they only showed 34 cents. They are expecting a slight bump up from this though. So like today they're expecting 59 cent EPS. So they're expecting this here. You know, so it's a good little bump up here. Let me see. The last one was, okay, so they're expecting a little bit higher than this. So yeah, they're expecting this is what the graph will look like after today if they show up as expected, you know, revenue wise for Tesla. So they are expecting a slight little bounce here in terms of quarterly revenue. If we look at their actual revenue graph, or not quarterly EPS, I mean. If we look at their revenue graph here, doing the same tool, this is a macro trends. This is who I usually use to look at this stuff. Their revenue has been really strong, obviously, over the past couple years, but they are expecting for revenue. They are expecting for revenue 25 billion roughly for revenue. So they are expecting this here. So the last one. So yeah, they are basically expecting this, and if they could have one of their best revenue quarters. If they come in better than expected for revenue, they could have their largest revenue quarter ever. So that's basically what they're expecting today. Now again, this is just the expectations. I'm not saying that Tesla is actually going to hit these numbers. important. So again, we'll see if Tesla can hit this number or not. We'll see. SPY down. Tesla trying to bounce. Yeah, but I don't even know if they're updating that website anymore, Yair, is I think something that you have to think about too. So like, look. All right, so here's the fifth. All right, so it's SPY technically red on the day. Look at the SPY; it's actually technically red. So yeah, so like, look, yeah, here. This is July. Okay, this is all the payouts they process in July alone. From the 5th, they processed a couple here, probably to get them out the way, but they jumped up from the 5th to the 15th. You know, so them pausing payouts in between pay periods is not uncommon. You know, it's certainly not uncommon, especially like, look, especially considering there's another 5 pages of payouts from the 15th here. You know, so that's just how they do things. Look, there's 17th, 16th. So they process them for a couple days after the 15th, and then if you miss that window again, you gotta wait until the first week of the month. I see Nvidia hitting 125 and going down. Really? So Nvidia has been going back and forth. Yeah, I bought CrowdStrike back here at the bottom here. So I bought CrowdStrike. We're very green on our CrowdStrike trade too. I bought it at 264, so we're up to 268. So I'm up $4 a share on CrowdStrike. I'm torn on whether I want to take profit. All right. All right, so I'll get back with you on that. I'm pretty sure everything's fine, but you know. CrowdStrike when it's $30. I look at patterns to make it the same pattern it did on July 16th before market open. Yeah, I mean, I'm in it right now. I got in really early. We'll see if it works, but I got in really early. %. Yeah, $30 is way too low. I know, like, CrowdStrike, I looked up their earnings and their revenue as well. So, like, if I look at CrowdStrike here, one thing that I see on terms of revenue is that, like, their EPS goes back and forth, right? So CrowdStrike's EPS does go back and forth. Looks a little sketch. But their revenue still shines pretty strong here. Like, this is their revenue graphs. So people acting like they're a weak company, you know, I don't know. I know they had the bad stuff that happened over the last week or whatever with Microsoft and shutdowns, but they're also down a huge percentage relative to where they were, right? So CrowdStrike prior to this was at $400 a share basically. Now they're at 260s. So they have dropped, you know, 40%, 35%, 30%, whatever that is. So, yeah. How do you think about Jake Paul beating all of our favorite MMA fighters? I think he's doing it to make money, and he's making money doing it. But I think that he is targeting people who he knows he can beat. Like, the problem with Mike Perry, I already knew he was going to beat Mike Perry. These are some of the easiest bets you can make as well, to be honest. But I already knew he was going to beat Mike Perry. Mike Perry has never professionally boxed outside of bare knuckle, right? So bare knuckle is wildly different, like wildly different from boxing glove boxing, you know? So the problem with Jake is that, like, him beating a bare knuckle fighter is just so much different than an actual boxer. It's silly, and it makes him look bad, to be honest. Like, to put it into perspective, right? Like, boxing gloves offer you a lot of protection versus bare knuckle, right? Bare knuckle, it's very difficult to block punches in bare knuckle. And so Mike Perry, somebody who uses like raw strength and power in bare knuckle, thrives because, you know, it's very difficult to block. It's hard to block a punch coming at you with bare fists. It's like you can go like this, but like it's getting through a lot of the time in bare knuckle. In conventional boxing, those gloves offer a massive amount of protection that Jake Paul knows, understands, and uses for his advantage. And so he was never going to win. Mike Perry was never going to win. Anyways, market's starting to turn here, chat. Market is starting to turn. What am I down on? Oh, Disney. Yeah, Perry's not even legit as a boxer, though. You know what I mean? That's what I'm saying. Like, Perry was never going to win. It's just different. Like, they tried to list his record with bare knuckle fighting to make him look competitive with Jake. But, again, bare knuckle is so much different than what he was doing with Jake. It shouldn't even be relevant, you know? I'm disappointed people are even tuning into these fights. Like, I'm not paying them money to watch these fights. Like, the good thing is that MMA fighters are getting paid, so that's good. But all right. Easy on my boy Jake Paul. I think Jake Paul's a good boxer. I think the one time he's fought an actual professional boxer, he's lost, though. And I did think he lost that fight. I watched him fight. Who did he fight? Was it John Fury? What was his name? I watched him. He got pieced up in that fight. All right, Tesla now dipping under the 200 EMA, under the VWAP here. Let's see if it holds. Yeah, Jake's a good boxer. He's never going to be pro level, though, in terms of, like, he's never going to be good enough to compete with the young guns of actual boxing, you know. Boxing's mostly a dead sport anyway, though, to be honest. Everybody knows this, you know. And I get his struggles, too, because Jake Paul's struggles are this, right? Jake Paul's struggles because if he fights an actual boxer, not only is he probably going to lose, right, but he's also, like, boxing is a dead sport. Nobody really knows boxers outside of Tank Davis, Ryan, and Tyson Fury, right? Maybe Francis, but he's mostly an MMA fighter. But nobody really knows boxers outside of that. I mean, they got a couple boxers that are good, but, you know, aside from maybe 4 or 5 names, nobody really knows boxing like that anymore. And so what it means is that when Jake fights an actual boxer, not only is he probably going to lose, but it's also probably going to be hard to get the viewership and the amount of pay-per-view buys that he wants. So he would have to do it free. He would have to do like a free fight. And, you know, there's a lot of risk. He's probably going to lose, and he's probably not going to get the viewership he wants. And so it's easier to fight well-known MMA fighters that he knows he can beat. You know, and so that's kind of the limbo he's stuck in, unfortunately. All right, so again, we're up in CrowdStrike. We're down in Disney on the day. We shorted Spotify for a little while, but we held it too long, and it eventually turned on us. It would have worked, though, I think, in hindsight. It would have worked some here, shorting the top. You know, we still got less than an hour before the opening bell. We'll see how it goes. Tesla drops earnings after the bell today, so we'll be back later on towards the bell. We're sticking around right now. We're going to trade the open now live. I'm still trying to figure out a way, like if I publish a new video on YouTube, isn't there a way to turn off notifications? So I'd like to turn off notifications here if I can. But I can't figure out how. Yeah, we're still green in CrowdStrike. We bought the CrowdStrike dip. It's not pulling back some too. I think I'm just gonna stay in it. I got a nice little green trade. All right, we're at 554s on the SPY. We're now under the previous closing price, under the 200 EMA, and under the volume-weighted average price. CrowdStrike started to bounce back up a little bit. Disney, very weak. Again, I might just keep DCAing, and then I'm just going to have to sit on it long term. All right, so let's see. All right, sorry. Kira was talking to me. All right, yeah, that's fine. Yeah, let's not be too political, RJ, if possible, bro, please. And thank you, sir. Yeah, I thought there was a way where... like, if there's a way to turn off... I thought there was a way to turn off how I posted this video. Let me ask AI this. I've been using AI for everything, honestly. No, so I don't think I could publish a video. Yeah, I'm trying to check something. Yeah, I'll just stick around. It's all good. Bullish recovery today. We'll see. Yeah, so the only way I could do it is unlisted stream, but I don't know. Yeah, unlisted or private's the only way to do it. I thought there was a way to do it outside of that. I think they changed it though. Problem with unlisted is that it doesn't show it to like new viewers. SPY started to bounce up. Tesla started to bounce up. Nvidia's up to 123s. Yeah, so it's saying I could give away some free memberships, but I don't know how. Anytime I try, I could do a Q&A. AI basically said the only way to do it was through unlisted. Because I want to do a day trading stream. Alright guys, so again, the SPY starting to bounce up. Nvidia up to 123s. It's not a second notification per day, Sam. It's days like today where I have Tesla and Google earnings that I'm covering after the closing bell. I don't want to send out too many notifications because that can dilute the channel, right? Like, I'd rather specify it only for like specific channels, if that makes sense. And I thought when I did Nvidia stream, I set it up where yeah. Alright, it's all good. SPY almost flat on the day here. Nvidia at 123s here, chat. Alright, so let me get rid of this, and then we're gonna do alright. Alright, so SPY is mostly flat. Let's see if we get some better reactions here. Yeah, another thing is I tried to start early today. Like I tried to start early today, and I'm gonna probably start the stream later today as well, or later on from now. Elon got all their. Is Tesla moving or not? Tesla is at 254s. All right, SPY technically green on the day. Let me see if it holds. Honestly, CrowdStrike has moved up a bunch. It's at 265s right now. Or no, it's at 260. Is that 270? Yeah, it's at 269s right now. So we're up a lot. I don't know if I should take profit or if I should let it work towards the opening bell. What do you guys think? Yeah, so Tesla earnings. Oh, Tesla morning or night. I thought you said mooning or not. Tesla earnings are at 4 p.m. today. 4:10 technically. SPY will have a bounce and then drop. Yeah. Where's my coffee? All right, so there goes Nvidia. So Nvidia obviously is like a big weight on the market. Let me get ready to day trade futures. So let me get up trade evade. Make sure this is my right account. Hold on. Yeah, this is right. All right, cool. All right, so we got this big bounce back. Part of me wants to short though, so I'm gonna try to short it. We're gonna take 3 contracts here short. We're getting right into this resistance level here. The problem is that the SPY just kind of bounced back over the previous close. And so we might add one more position here to 5 contracts. All right, there we go. All right, I'm gonna add to this again. We got 7 contracts here. But this is micro, so we're trading a little bit larger contract size versus how we would trade with regular mini contracts. We've had a lot of green candles here too, so I'll give this time. This is a longer term range bound trade. Honestly, I gotta take a couple shares off of CrowdStrike. Just a couple. We've already made a bunch from the trade. All right, so we just locked in some profit for CrowdStrike. We're still holding most of the shares. We took less than 50% off. Just a really nice long. We'll probably try to hold the rest and see how long it takes to get some good action there. Honestly, Disney's hurting me the most right now. If Disney keeps breaking down, though, I'm going to have to cut some of it. I usually like it down here, and I don't mind being patient. But if we start to break under, like, 85s, then I'm going to genuinely have to consider cutting it. What do you guys think? I'm trading futures right now. So I am trading futures. The futures market, you could day trade. Pre-market doesn't mean much. But I can day trade short, buy market, sell market. Very similar to day trading stocks and futures. There's just no PDT rule. I'm trading on a platform called Apex, which is a funded account program in futures where they give you a demo and they test your skill with a demo account first. If you pass the test with a demo, they fund you with a live account between 25K up to 300K with a 90% split. And they pay out millions. They fund thousands of traders a year. It's a great way to learn how to day trade. And when you consider most day traders lose, it's a great way to limit your risk is what it is. All right, so we're going to take half off there and just lock in the profit. We're trading micros early. I haven't had the best results day trading the last couple weeks. And so we are kind of limiting our size a little bit here. And again, this is the futures market, very similar to day trading stocks, no PDT rule. And if you want to get your feet wet, just try Apex. You know, Apex gives you a demo, and again, they test your skill with a demo account. If you pass it with the demo, they fund you between 25K up to 300K with a 90% split, and they pay out hundreds of millions of dollars to their trader. They paid out over 100 mil to their trader. They fund thousands of traders a year. And so if you want to check them out, we're going to go ahead and take a little bit more off here and just lock this in. If you want to check them out and learn how to day trade with limited risk, again, if you lose, the base one's $35 if you use my link. If you pass it, you get 25K in funding with a 90% split. You can also get the 150, 250, and 300K funding challenges for the same price, about $35. Yeah, I mean, even if it is a dead cat bounce, I don't know if I want to add to this or not. But even if it is a dead cat bounce, I think we might still have some time until the opening bell to play with it. All right, so we're out. We made about $50 just now on that trade. But yeah, CrowdStrike, again, we've already taken most of the profit. I can watch it. To be honest, it's not a big enough trade that's going to like severely influence my positions or anything like that. Yeah, they pay me. I'm biased. They're a sponsor of mine, so they pay me money. I'm biased because of it, of course. I always try to make sure to be really honest about that and, you know, let people know they pay me. I'm biased. You know, understand CFTC 4.41, all that good stuff. Yeah, market volume has been down a lot over the last like 3 weeks. Viewership wise for everybody, not just me, but for everybody, viewership wise is down. Stock market views are down big. Hopefully Tesla earnings will give us some big stuff. Yeah, so we got a little cushion on our trades here. But yeah, it says stock market volume has been lower than normal. In recent weeks, various factors contribute to this trend, including seasonal economic uncertainty and investor sentiment. Summer months are lower volumes. Investors take vacations, reduce market activity. The S&P volume was 4% down in June. 4% lower than in June, and 12-month leading volume was 6% lower compared to the previous year in June. In July, various factors, seasonal patterns, economic uncertainties. Look at the Tesla, the NASDAQ, and the SPY both dipping lower here too. Summer is great for a trader, high volatility. No, not really. Summer volume's actually lower. Unless we're talking maybe like small cap penny stocks. Like summer volume is much lower than like the big months of the stock market are mostly. All right, so we're gonna short into this pop. We'll take 2 contracts first. Take a little bit more, 3. Most of the time, summer months are slow. The big busy months of the stock market are like October, November, December, January. I think are the 4 busiest months of the market. And then the slow months are the summer months that we're currently in. So this is normal for the most part, but Okay, so we're just getting punished here on this short. I'm not gonna check anymore. We're slightly down in the day, but big pop back up. We're gonna just go ahead and cut it less than 20 down. Again, we're trading smaller size for sure right now, just based off of how the market has treated me the last couple weeks. Yeah, 100 times more volatile. Increased volume should lead to the nice volatility. Yeah, we'll get some volatility back. So leading into November this year, though, since it's an election year, we might actually get lower volume from increased uncertainty about the outcomes, cautious trading behavior, reduced volume. What's the VIX at? Yeah, the VIX is... Yeah, the VIX is down low, which means really low volatility. Still at the bottom range. How can you trade the VIX? The VIX is a volatility indicator, so like it's yeah, so the VIX is a volatility, so it's going to go up when volatility is high and go down when volatility is low. Very choppy neutral. And again, you also have to understand today is a big tech earnings day. We have Tesla and Google earnings this evening. And so a lot of the time leading into those big earnings report, we're going to get chopped. And so when we look at the SPY is completely flat. NVIDIA, I don't know where the previous closing price on NVIDIA is. Let me see. Well, what did I just click on? There we go. Let me put up two charts here. Or maybe three. Yeah, so NVIDIA... I'm trying to see what the previous closing price is for this. So yeah, Nvidia's slightly down, but a lot of stuff's choppy today. Like look at the trend, up, down, up, down. We're still in CrowdStrike, but I'm not really gonna add more to it or anything like that. I think I'm just gonna sit tight in this one. I'm gonna exit out of some of this graphs that I've been looking at. Again, Disney's what I'm down on most today, to be completely honest. Said the opening bell treats us. I got too many screens up. People are talking about the guy that won the World Series of Poker using a solver. Who cares if he used a solver? I don't understand the big point of that. The VIX, guys, by the way. So the VIX is calculated using the prices of S&P 500 options, index options. It looks at the implied volatility of a wide range of S&P 500 options with different strike prices. It takes into account weighted average of implied volatilities, providing a snapshot of expected volatility. It provides investors with a greater measure of market risk and investor sentiment. A high VIX value indicates greater uncertainty and fear, while a lower VIX value suggests a more stable and confident market environment. And so, like, an example right now, if we look at the VIX here, is the VIX is currently at 14.97s. So the VIX is down a lot over the last day. But over the year, like, we spiked up a little bit, I guess, over the last few days. I guess with uncertainty getting higher leading into earnings is what I'm guessing is here. But I might be wrong there. What do you guys think? Russell 2000. Small caps tend to run when blue chips slow. And so I think the Russell, which is symbol RTY in futures, has seen spikes recently. Not a shock with corrections and everything else. UVXY. TVIX used to be one that we used to trade too. It's no longer around. UVXY is still tradable though. This is an inverse volatility ETF though, so this will typically move inversely to the market. So if the market goes up, the VIX will go down and vice versa. See the SPY is slightly green, UVXY is slightly red. It's kind of doing the opposite. CrowdStrike at 269s. I'm trying to see my last Tesla stream here. All right, so the market's still starting to hop back up. CrowdStrike started to test those highs again. See, I don't know whether I should add back on a big pullback to CrowdStrike or not. What I'm going to probably try to do today, considering it is big tech earnings after the bell and Google and Tesla earnings can and could impact the market right now, with both of these being very heavily weighted stocks, specifically Tesla and Google, leading into the market open. We might get choppy sideways action, I'm assuming. And so with that said, I'll probably try to short the top of the range if I can and cover the bottom of the range is what I'm looking at. UPS is down a lot, too. I might even buy this dip, too. I don't know. Let's try it. All right, so we bought a little bit of UPS, too. It's not really a company I'm going to hold long-term. CrowdStrike testing the highs of the day here again. So CrowdStrike's starting to move back up. All right, guys. So Nvidia's still trying. CrowdStrike is buying the panic sellers. Yeah, so that's what I bought too. I don't know, man. I think I'm not a big fan of like shorting the top. I tried to do it with Spotify today. I don't mind buying the bottom though. Like when a company drops this much, like UPS. Again, I don't mind buying this small little dip and seeing if we get a good little bounce from it. Like I don't mind buying this type of dip and seeing if we get a bounce from it. But again, I think there's risks. UPS is not really a company that I like long term. And so I think UPS is probably going to go out of business long term. And so I think that's where the big risks are. Tesla reporting at 4 p.m. Eastern Standard Time. Also, y'all do me a favor. Hit that like button, chat. What's interesting is we got a bunch of votes. We got almost 800 votes. UPS going out of business. Who will deliver my mail then? Well, UPS is not the one that delivers your mail, Larry. USPS is who delivers your mail, brother. This is my point, is that UPS is a different business outside of USPS. USPS delivers mail. UPS is a private shipper. And so I think it used to get a lot of business before Amazon was around, but I think when you consider that most packages come from Amazon and Amazon has their own shipping service now, you're going to have lesser and lesser of a need for private shippers like UPS over time. I still think you need them, and I still think they do deals with Amazon, but I think the risks long-term are there in terms of obsolescence is what I think the big risks is there. I think eventually they might be obsolete, and nobody needs to use them anymore, and that's bad for their business, of course. So again, it's just something that I don't want to buy them long-term. I don't like buying them long-term. I think there's big risks buying up stuff like that long-term, but short-term, maybe we'll get some good stuff. So I think that's kind of what it is, where long-term, risky, short-term, maybe we got some extension that we could play into and buy like a dip. I'll add a little bit more to it too. We got 20 shares. We're about flat on the current position. Again, the CrowdStrike position we got in earlier is doing really well. We bought it at 264s. We're up to basically the highs of the day. Got a nice little bounce back that we've taken about 40% of the profit on already. I don't know what we want to do on the rest of it. All right, so we're getting a big decrease here. So we're actually slightly green at UPS. I don't know if I want to add to it. Disney's still hurting my profit on the day, but we're not actually down that much when you consider everything else. I just don't know what it... Disney had to have some news that showed up. Let me see if I can find it. So Peacock, Comcast's parent company. Oh, Peacock and his parent company Comcast are gearing up for a pivotal moment with 2024 Olympics. Is this making people skeptical of Disney? What's the Dow Disney news? Disney just dropped a lot. I'll probably try to add one more small position to it just to kind of average in over time, but I don't want to take too much here. Yeah, for sure, Nick. So Nick said that's the route DirecTV and Dish Network took. This is going to be a problem with a lot of companies like this, right? The real root of the problem, look at the whole market turn, is that companies like this, there's risks that they're not going to be around anymore. I'm bearish on AT&T, Verizon, all the phone carriers. I've noticed a big like seismic shift in the way people consume things, specifically in terms of mobile networks. They go cheap a lot of the time now. The strategies for getting mobile networks has changed dramatically over the last 10 years. The biggest change that we see here, number one, is that people don't lock themselves into long-term contracts anymore. Like, I see this now specifically, and like an example of this is I was trying to buy my daughter a phone carrier, right? So we went to the mall, and my wife was like, hey, let's just go buy AT&T, right? Let's go buy AT&T. Let's see if we can get like some type of quick plan set up, right? And let's see if we can buy month-to-month plan of some sort for my daughter. And so we go in there, and basically the lady talks us into how easy it's going to be to create, a contract, that it's going to be cheaper, and that we can do a month-to-month contract with them, and there's going to be more stuff that we don't have to go prepaid, that we can do month-to-month or whatever it is. And so we say, okay, cool. They start asking us for our social security number. They start asking us for all these different things that we never needed to give them. We shouldn't have needed to give them. And so my wife and I kind of look at each other, and we're like, yo, why would we give you our social security number to open up a month-to-month like phone service? Like, we just don't need to do it. We don't need loans. We don't need anything like that. We just want to get a simple month-to-month phone carrier. The lady said it would take an hour to set up, and that, like, again, in the end, companies like that are still hell-bent on paying contracts or like locking people into long-term contracts using their social security number, like reaping their data. And unfortunately, I'm just not about that. I'm just not interested in that. I think there's a big problem with that. And I think over time, people are going to, like, why would you pay more to get locked into a long-term, like, contract that's less favorable for you, right? Wouldn't it make more sense to just do month-to-month, no contract, stuff like that? I think that makes way more sense. And I think that's what we're seeing a lot of people do now, especially. And so I think companies like AT&T and Verizon, they're still going to be around because they're offering pay-as-you-go, no contract-based services, but I think they're going to lose business over time, and I think that is going to, unless we have like a big tech change, I think that's going to keep getting worse and worse and worse. Yeah, I'm not going to go through who I'm using as a service or anything like that, but Disney bounced up a lot just now, though, so that's good. Maybe it'll continue bouncing. They are restructuring heavily. Business is fine. I'm looking at a whole full ramp. Oh, Boeing. Yeah, I mean, I'm not talking about anybody specifically, but one thing that bothers me is that something that I see in a lot of movies now, a lot of kids' movies, is that the parents don't have the best interest parents don't have your best interest at heart. Like, parents, be who you want to be, and, I'm for that, but I also don't think that we should make it, like, parents have their children's best interest at heart more than anybody else, like, most of the time, right? And I think there's only, I think it's certainly not most people situations where it's not that, and so one thing I always have to tell my daughter is, like, hey, despite what any movie shows you, like, I have your best interest at heart. Your mom has your best interest at heart too, but I think it's different. I think kids want to find themselves, and, like, that's okay, all right. Yeah, I mean, I don't have any of the big name companies for my internet. I have fiber optic internet here, which I was so lucky to find. It's no contract based, month to month, very cheap. It's like $75 a month, no contract, fiber optic, 1,000 gigs up and down. So that's who I have for my stuff. So is this a strike? Let's see. Micron introduces the world's fastest data center SSD solid state drive. Yeah, so UPS says the growth rate will not be as high as we projected in the beginning of the year. Is restarting share repurchase program and including up to $500 million in 2024. Philip Moore, CFO, expects further gross margin expansion in combustibles business in the second half of the year. Let me see if an AI will query this Disney news. See if they can query this news this fast. So I asked AI, what is the Disney news that just happened that hurt their stock over the last 10 minutes? Again, very choppy behavior here. You can see big upward movement, big downward movement. Tesla slowly breaking over the 200 EMA and the VWAP. All right, so did Disney earnings come out today? Did they have a surprise earnings release? Because I don't see anything about that. They said their earnings were supposed to come out August 7th. But AI is telling me they came out today. You know, I don't see that. Yeah, so I think AI is just wildly wrong. Yeah. Last earnings report was May 7th. Yeah, so not an earnings report today. Okay, AI. All right, so UPS is bouncing back up a little bit. Tesla is still over the 200 EMA and the VWAP level. We got 10 minutes until the market opens. CrowdStrike pulling back a little bit. I don't know if I should add to it. UPS is still consolidating. Or all the earnings releases straight up gambling. I wouldn't say they're gambling. I would say that most of the outcomes are baked in already when the earnings come out, and so you get a lot of inverse reactions. What I mean by that is like a company report good earnings and go down. Company report bad earnings and go up. Why? Because the moves are already baked in, and so if a company reports bad earnings and goes up, it's usually from people covering their short positions and buying shares back. You know, same thing on the downside. People are selling, or people are buying up shares. People are selling with good earnings and buying with bad earnings. You know, and I think we see that a lot. But outside of that, like the real moves happen not as soon as the earnings are released, but over the coming days and weeks and months sometimes, if that makes sense, right? So like if a company has good EPS, good revenue, good guidance, good numbers, generally speaking, it's going to move up over the next couple weeks outside of excluding outside factors, you know. All right, guys. All right, chat. Let's see what we get now. We got 7 minutes. CrowdStrike bouncing back. UPS I'm actually technically greened. Disney still falling down some though. I'm trying to click on this to see. I'm gonna use vidIQ. Alright, we're slightly green at UPS. I want to see if it gets higher. CrowdStrike's still running back up here. So we're coming back down again. We got 5 minutes left. CrowdStrike up there. I don't know what I want to do with UPS. UPS is bouncing up some. I'm slightly in it, but it's dipping down now. We're going to wait and let the opening bell play out first. Yeah, it's been a while since we had any big economic data, right? Which is kind of where we slow down too. Like, my channel covers mostly economic reports, and so the last couple weeks have been pretty much silent, economics-wise. You know, last week we had retail sales, and that's basically it. This week we got some stuff starting again, though. We've got PCE data on Friday. We got GDP data on Thursday, and all the people talking about a recession, GDP data on Thursday is going to be the big signal towards it. Inflation is going to fall like a rock. Might get one iffy print as long as unemployment don't take off. We agree, maybe, brother. We'll see, dude. Again, it really depends. I think it depends on what the Fed decides to do. If the Fed starts pushing for rate cuts, obviously over the coming year, we're going to get worse inflation. But it depends, right? There's a lot of ifs. Alright, I'm in UPS. I don't want to take profit though. Disney just cracked lows again. Wow. So Disney down to $91 a share. I'm trying to see what the big gap down is, but I don't see any news. It doesn't have any news showing up on screen either. Declining park attendance maybe, but I'm trying to see any recent news. Does anybody know what the Disney news could be? It could be strength in Netflix. CrowdStrike just broke highs again though. Growth. I don't see anything. It's a weird big volatility surge downward for Disney, which is strange because, you know, these are big downward pressures. Now I'm wondering if some type of numbers showed up. Comcast reported numbers here, which is one of their big competitors, but their numbers for Comcast weren't like Comcast numbers were mixed, so it's not like Comcast was like crazy good numbers. They were mostly mixed. You know, I'm not really going to add any more to Disney here, though. It's just too risky, unfortunately. We'll see how the opening bell treats us, though. All right, guys. Union strike. Okay, gotcha. All right, here we go. We got 1 minute, chat. 1 minute. Let's do this. We're going to do a quick stream today, and then we're going to be back for Tesla earnings. All right, here we go. Again, we're going to try to play the opening bell, and then we're going to be back for Tesla earnings, so we'll be back later. Be ready. Bought Amazon yesterday. Hey, good luck. All right, UPS is cracking lows too. I'm in UPS. I don't know if I want to hold it through this or what. We're basically slightly red now. UPS is down so much though, so I got to just be prepared to cut it. CrowdStrike dipping down. Disney down to $90 a share. All right, here we go. Here's the opening bell, chat. Good luck. UPS just popped right back up right before the close, or right before the open. There's the opening bell, guys. Ding, ding, ding. Watching CrowdStrike here. Watching UPS too. Reap UPS at 130s. All right, so there we go. UPS bouncing up big. CrowdStrike correcting big. Disney up a little bit at the open. Look at CrowdStrike's correction. Luckily, we took some big profit in CrowdStrike. And UPS is treating me nice. Look at CrowdStrike come all the way back down. We're still very green on the day, though. But, man, CrowdStrike with a big correction here. Wow. People taking profit on CrowdStrike. I'm in UPS. All right, we just took profit on half of our position in UPS. Kind of scalping it because we're very green, and I just want to lock in that profit. We'll see if CrowdStrike bounces back. I don't really want to add to it. We're definitely red in equities today. And I don't mind cutting Disney if I need to cut it, to be honest. I'm not going to sit through this if we start to get really, really red action here. All right, so we're going to go and take a little bit more off of UPS. So UPS is doing okay. Look, if Disney breaks under 90, I have to probably... I mean... I'll give it a second. But if Disney starts to dump, I got to cut it. I certainly don't want to get stuck in like a super depreciating asset. CrowdStrike all the way back down too. Yeah, I gotta cut CrowdStrike too. It's red on the day now. We're still green on CrowdStrike to put it into perspective. We made money on it. Yeah, I gotta sell a little bit of Disney. We'll hold a piece of it still. Like, I don't mind being this cheap, but it's just too much risk to hold on to Disney right now with how fast it's falling. Yeah, good luck, Seahawk. I hope you make money, bro. Like I said, I'm not gonna risk it. I hear there's a strike going on right now, so I got kind of unlucky with that one. I'll hold most, like I took a third of the position off. I'll hold the rest. All my swing trades that were doing well in pre-market kind of turned on me too, including UPS. I am green on UPS, but if it cracks lows, I'm gonna get out. Hey, thank you, Patel. Appreciate it. All right, so the first 4 or 5 minutes have given us mostly chop today. Mostly chop. I'm going to look to short the top of the range if I can. We're short. We got 3 contracts now. We're at the very top of the range. I'd like to take some profit on this if I can, but it's just popping back and forth, back and forth. All right, we took a little bit. Look at how volatile. Yeah, I got to go ahead and cut my UPS trade. We actually got out with a little bit of profit, but not much. Disney's bouncing up to 91. That's good. It looks like it was a good move for me to sell my CrowdStrike. But the market's also ripping up too. Again, we're trading very small today. We're almost at the top of the range, so I don't mind buying it here or shorting it at the top. But I'd have to cover the position first. And then as we get to the top, I'll add to up here and then maybe add again. All right, we're in 4 contracts now. There we go. Cut it. Cut it. So we basically made all our money back short. And then it kind of retraced back. A lot of choppiness, guys. Y'all just be careful today. We'll add a little bit more to this, see if we get a flush. There we go. All right, we cut a little bit more. So it looks like my cutting UPS was the right move. Same thing with cutting CrowdStrike too. Both of those broke down big. We'll maybe get another entry on CrowdStrike, but it hit that max loss level. Yeah, I'm out of this. So we made most of our money back, but we're still down on the day. We'll come back to it. I'm watching my stock positions here. Yeah, I'm still in Nike. Yeah, I'm gonna see if we can short the top of this too. Jump right back in short. All right, we're in 4 contracts. I'm betting on choppiness today. All right, we're gonna cut half. I'm betting on choppiness because I think like this is what we're gonna get during earnings days. All right, so we're up about 15 bucks. We made a little bit of money. Disney bouncing back some, so that's nice. But again, we limited our position on Disney. We cut it. We just had to. Range-wise, we're very sideways, so we might short another pop up here. All right, so we're in 4 contracts. Took half off there. Look at Tesla start to come up. We got to cut it. So we're down on the day. We're just kind of going back and forth. My portfolio is looking much better though. So we're almost flat on the day in my portfolio for stocks. I will short this though. All right, we got 6 contracts here. A larger position with micros, but we'll play with it. There we go. All right, so we took most of this off. We'll add to this now too. I'm not going to add any more to this now that we're red, but let's see if we break down some. Tesla's correcting back down. What's Nvidia doing here? I'm going to put a... Nvidia's breaking highs. I don't like this. Yeah, I got to cut it. Look at Nvidia break highs back up to 124s. I'll still try to short the top, but we're going to try to average a little bit better in here. Look at Nvidia go. Man. All right, we'll add to this a little bit better, but I'm hoping we're going to get pushed down at the top up here since it's earnings day and we'll have choppiness, but who knows. Small risk. And if we start to lose too much, we'll just cut back. My equities portfolio is doing better. Give it some time. There it goes. The music sounds like it's going against me, huh? Nvidia is what's shooting up too. Alright, we gotta cut it. We tried. My equities portfolio, ironically, is actually doing really good. But, yeah, again, I've been getting chopped out the last few days here, to be honest, chat. So I just don't want to risk too much, to be honest. We'll be back later on for Tesla earnings. We're in Nvidia, so Nvidia is what's dragging the market up. But yeah, I just don't want to get too chopped out here. Big rips in the market, mostly driven by Nvidia specifically. If you look at Nvidia on the bottom right chart, it's up to 125s. Yeah, everything's surging up. NASDAQ surging up. E-mini surging up. Disney's starting to bounce back. It's almost green from the opening bell too. MU is doing good. We're in MU. We're still green on the portfolio, very green, thousands up on the year, but Coca-Cola, we're in Coca-Cola and it's green too. I think Coca-Cola had good earnings though this morning. But yeah, I don't want to give too much back. Like I'm gonna try one more trade here short and see if we get a big turnaround. It's gonna have to be a longer term trade. But we're not gonna take big position size either. Take a little bit off there. I just don't want to get caught in another big surge up like we just got caught in. Take a little bit more off there. And then maybe we'll add to this too. Alright, we got another piece. Alright, well we just made 30% of the position back. We're only down 130 bucks, which is pretty small, but I don't want to trade too crazy ahead of earnings, to be honest. I think we're probably going to get choppy action, but when the whole market is weighted towards Nvidia, I can't really bet super heavy into it. Like the next FOMC meeting, I'm more confident in something like this, but I don't know if Tesla and Google earnings are going to be significant enough to cause like massive amounts of chop ahead of it, which has kind of been one of my favorite strategies lately. And so I think because of that, I need to kind of step on the brakes a little bit. And we'll be back later on for Tesla earnings. So yeah, guys, we're just going to close it down. We'll be back for tech earnings this afternoon. So just be ready. I'll see you guys then. And yeah, y'all be safe, guys. We'll see you guys later. I love you all. You have a great day. Check out Apex if you want to day trade with me. Again, if I was day trading my own money, I would be down much more. This is a funded account. They give me a demo, test my skill with the demo account. If I pass the test with the demo, they fund me. If I fail, I only lose the subscription cost, the monthly subscription cost, which in this case is 35 bucks a month. So again, they give you a demo, they test your skill with that. If you pass it, they fund you. If you fail it, you only lose what you pay for it, which again, in this case is a very small amount of money. versus losing. And if you put the money up yourself, almost all day traders lose. So most day traders are going to lose thousands of dollars. Oh, also, we actually made money on this account yesterday, I think, or at least we came in almost flat. Let me see what we were up on this account yesterday. So after the stream closed down, we did end up, I think, going slightly green, or at least if we weren't green, we were flat yesterday. Let me see. Okay, yeah, so yesterday we lost $16. So could have been worse, right? We lost $16 net yesterday. Or $16 gross. So we basically made all our money back yesterday too. So we'll see if we can do that today, but I'm probably not going to trade it all anymore. Again, if you want to trade with me on Apex, this is the futures market. I'll put the link up. You can check it out. And again, I'm going to see you guys later. Market AI based on current market conditions. That might be a good idea. Again, though, when I was losing in that trade and the market was ripping up, it felt like the music was going against me though. But yeah, no, I'll be back, guys. Look, y'all check out my link here. I'll put this up. I'm trying to figure out, make sure I use the right link. All right. Okay, yeah, this is right. All right, guys. Hey, I'll see you guys later. Here's the link. Check it out. I love you all. You'll have a great day. We'll see you guys back in a couple hours.